Sorry, I had to do a little housekeeping there since we've moved out of some range. We are into some key areas down below. We'll go into that. Uh, Remember, this is about integrating Bookmap with auction market theory and volume profile in the intraday developing time frame. And before we look at today, I want to point something out from yesterday for those of you who are potentially confused about the process. Uh, One of the things I attempt to stress is that this is trading in fractals. And what appears to be scalping is only initiation, if you will say, in a more micro short-term time frame in an attempt to align with higher time frames to participate in the larger rotations. Every trade starts in a shorter time frame. So that is the point. So if there's any confusion about what the intent is and the purpose of this stream, it is to share with you methodology for alignment. And as retail traders, at least in my view, it is about risk management, number one, structure, and understanding the larger picture. So when the larger rotations take place, we can hitch a ride on the larger wave. In the meantime, the range is determined by the participants in the market, not us. But as a day trader, we need to initiate, at least in my opinion, in the intraday time frame, in the shortest, tightest fractal that allows us to get aligned and have appropriate risk management related to the number of contracts we trade or our account size. And that's the basis of this. Where you go from there and the time frame you operate in, it is all the same. But for me, I'd rather trade more contracts with less risk and have more opportunity versus, and again, just a personal opinion, wide stops going for large swings when I can still participate in them when they take place, but also participate in shorter time frame rotations. Because it's not up to me. It's up to the market participants and the time frame of those participants. So I hope this helps clarify what we're trying to do, or at least what I'm trying to do. And of course, this is just one way to approach the market. There isn't any right way, just the way that gives you a positive expectancy and a trade plan that keeps you in the business so you can have a career in trading and not just passing through. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Live trading is in simulation demo paper trading mode and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Right? I think we know that by now. Now, for those of you who are new, just a quick overview. This is based on auction market theory. What is auction market theory? It's simple. It goes on sale, you buy it. If the price is perceived as too high, you refuse to buy it, and the sellers mark it down to attract the buyer. The market is constantly looking to establish equilibrium between the buyers and the sellers. The interaction of buyer and seller is what is perceived to be a fair price, and that creates what we call high volume or high volume nodes. Now, the interesting thing, and there's several elements here, is it is represented by the volume at price as opposed to price. And typical indicators are price oriented. They are not volume oriented. Volume profile looks at price in a horizontal view versus typical indicators, which are more price-oriented, moving average and reality-oriented oscillators, and also time-based. So it's the interaction of volume with price that gives us more insight. And the other aspect of volume profile, once you understand it, and it does take some time to kind of change thinking, is that it is generic and it happens in all time frames. And when I say, and you can see where it says time frame here, auctions take place in all time frames, from the highest multi-year time frame, the intermediate time frame, into the micro fractal time frame. An auction can take place in a 3-tick consolidation. Now, we might not be able to do anything with that, but at some point we can slice the market down into a micro time frame. And for someone who might be want to initiate, think about the time frame you initiated. Isn't it you start a trade no matter what the time frame is you're ultimately trading in a short time frame? So how short can you slice that time frame? And can you use the same tools that we use in a higher time frame to attempt to get alignment? And since rotations are random, we never know. But we can look at conditions in the market and suspect what might happen. And if we can suspect what might happen, we may have an opportunity to get aligned. Now, the other element, let's look at today, and we will look at today. What is going on today? Well, we have a big move down. That's pretty obvious, right? But how do you participate in it? There's dual context currently taking place. One, of course, is, let's call it a down move, call it a trend day, put a label on it. We have what's called a multi-distribution, downtrend at the moment. However, inside of that move down, there are rotations. And that is a different context from the higher time frame. If the higher time frame's down, inside of this higher time frame, these rotations become what's called mean reversion. It's a different context. So which context are we trading? Well, if you understand fractals, we are using the micro time frame inside for execution inside a developing time frame, which is rotational and mean reversion, inside a higher time frame, which currently is down. Okay, so that is the whole point. And now the tool to execute in the more micro time frame in alignment with these multiple higher time frames is Bookmap. And what it uses is order flow. We can look with the volume profile and isolate specific microstructures, which I call triggering structures, which allow us to potentially engage with the market, see potential risk, and, as they say, act accordingly, aligned with your trade plan. So I hope this gives you a quick snapshot of what we are trying to accomplish. Now, I want to point something out from yesterday briefly. If I can find it, there it is. And this is auction market theory. Now, if you guys remember in the stream yesterday, and remember, past performance is not necessarily indicative of future results, and I know, but I want you to know, market is random. It could do anything. We were selling all day yesterday in the stream. Do you guys remember that? Now, by selling, I'm saying is we were discussing that. All right? Is everybody with me? So this is what's called balance, and in the profile. And in the higher time frame profile, it looks like this. And and what you're seeing is the volume at these levels. And that's the rotation. And let's call it what it is. A consolidation, right? Chop, 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 chop. Well, here's where the profile, in my opinion, really sets it apart from other methodologies. If we understand what this is, we can participate in it. And we did as this was going along, as you guys remember if you've been following the stream. Here's the key. 4115 in this structure was where the highest volume was. Now, why is that important? Well, basically, too high, too low. And at the outside edges, the volume would taper off. That is your shopper going, that's too high, I'm not going to pay for it. And then the market would traverse itself. And it would come down here and go, right? low volume area. Nah, I'm not going to pay that. And this is what creates this rotation. And as the market traverses across, this is the intersection of price and volume where the most volume took place in this structure. And you can see it here and you can see it here. And the one on the right takes in all the volume since the market has been here. And wherever, I think this was the low of the year, right? 39-ish, right? Somewhere in there. 3807, 39, low area of the year. So this is what happened. We consolidated in here, this big consolidation with this buying tail. Do you guys remember that? When we came out of this, we established this consolidation. So consolidation, consolidation. Where was the highest volume in here? 401475. And I always say 4015-ish. You know, trading is like horseshoes and hand grenades. You get close, and who knows? Remember. So yesterday, what did we do? We opened, of course, we traded, and we tested up. Now we're under this. We tested up to the highest volume. And I always look at this like a price check in aisle 3 at the supermarket. Is this too high now? And we don't know. It could have crossed, right? Remember, we don't know. But what happened? Bang. And yesterday, if you remember, we were narrating, and they're not recommendations, potential shorts. So the narration I was on yesterday was only short, period, right? And I know I was getting questions about why don't you buy it? Well, I says, well, if we break out of this, which certainly seemed like it would be possible, then we would have a potential move. Now, we got it, and we narrated it. And it was rotational yesterday at first because we were inside of this, and that's what this is, rotation, two-sided trade, two-sided trade. When we broke out and took out this low, we went into a trend configuration. And guess where the target was? And this was all in my book map, and this has been sitting here since we were down here, okay? The highest volume. That was yesterday's target, and I think we hit it almost at a tick. And the point is not precision. That doesn't exist in trading. It's auction market theory, why the market tends to do what it does. Because if this is too high, and last time we auctioned down here, it was too low, the market has the potential to check it. And that's what we did yesterday. Now, we have an input today called the CPI. That changes things. Now, we are auctioning lower. And this puts this potentially and this 3,900, which I had to put on my chart, right? Because we're kind of we moved out of this, and now we're going to look down here to try to find the fair price. And it might be 3,900-ish or lower. Could be down here, and I don't know. Or 38.54. So I hope that helps, and I hope you understand auction market theory for those of you who want to trade in the high time frame. All I'm doing is getting aligned with the high time frame. I want these kind of moves, but they all start out in the micro fractal as locations to potentially interact with the market with the risk that might fit your account size and the number of contracts that you might trade, and then it goes from there. I always think of us as fleas trying to hitch a ride on a higher time frame. Primarily we're trading against other retail traders like us, but when the higher time frame comes in, it's the same process. It's just what happens is the range expands. Hope you find that useful. And I hope you can understand what it is about multiple time frames and trading in fractals. And again, by the way, if you're new here, welcome. Please let us know where you are. I want to welcome you all to the Trader Lab. Okay? If you haven't, there is a video you can watch that's foundational. This way you'll understand what's going on, and it does address trading in fractals in multiple time frames. Also, there are downloads, I guess about 80 of them. That's a PDF, and you can get that by going over to the Bookmap Discord Traders Lab. And it's a pin to the top. They're PDFs. It'll save you, I would say, literally months and for some years of wear and tear because I've simplified. This is not a complex process. It is very logical, and you can replicate it. And in the Trader Lab, it is a cohesive community. They do get frisky occasionally, but that's life in the testosterone world, and estrogen, I'm sure, too. And today's one of those days where there's a lot of emotions running high everywhere. If you trade, if you've had a good day, you're stoked, as they say. If you had a difficult day because of the range and volatility, you have other feelings. And this is an important day to journal and to be in touch with your emotional state, because you can learn more about yourself on a day like today than you will from one trade in the market. It's really about learning about yourself. And this is when you get to look in the monitor, which is really a mirror, and see your truth. Because there is no real truth in trading until you're sitting right here, right now. And that's where you really learn who you are. Because in the outside world, that is not what is the trading world. And we need to learn about our responses and our emotional states that are generated by the stimulus that comes from FOMO, fear, anger, revenge. And a lot of that gets transferred to other areas and feelings. And if you don't get the benefit of a trade, get the benefit of the knowledge. Because in a trading career, these are elements that are prerequisites to having a long-term business career. Otherwise, you're going to statistically probably not be one of those that's going to be here in the long term. It's just the truth. Might not be the truth we want to hear, but it just happens to be what I've observed over a couple of years of trading. And if you want to know about me, watch the foundation video and you'll get a little sense of my journey, and maybe you'll see some of yours in there too. So let's go take a look. Any questions before we move along? I'm not going to spend a lot of time with this because I want us to look, we're kind of down in my target zone. Now that doesn't mean, by the way, I have a target, doesn't mean a thing. It's kind of like maybe. Maybe is what we have in trading, right? So I don't know. So and I'm not in the business of predicting. I'm in the business of reading auction market behavior and trying to get aligned. That's as good as it gets for me. I have no illusion. And I would suggest that other traders don't have an illusion that they have something. There's no secret sauce, no holy grail, nothing. By the way, 3,900, right? So let's see what we have. Now I had a couple things. We have something, and this is available to all of you to download in the Traders Lab, and I invite all of you in YouTube, if you haven't come over there, it's really a great community. It's collaborative, and we welcome input from everyone. If you're going to, but it's not a trade calling vehicle. That's not the purpose. It's for about education. And in addition, if you come over to the Bookmap Discord, what there is also is other education. In fact, the education's free. I mean, what I do is just one element, and I do my thing, right? And it's simple, so it's transferable, and you can basically, create a trade plan from what you're going to be seeing here. But if you go over to the Bookmap Discord room, you'll have access to my downloads, which are about, I think it's 80 PDFs, okay? Yeah, Lucas, did I answer the question about the PDFs? There, if you go over to and there's a link down at the bottom in the YouTube where it describes what I do. You can go over to the Discord Bookmap Traders Lab. I'm a little slow today. I'm on my third cup of coffee, and let's say I had a busy morning. So I apologize if my brain is a little out to lunch because I'm tired. By the way, in my trading rules, if I'm on a third cup of coffee, it says caution, because it means my level of cognitive ability to focus and multitask is somewhat limited. And I mean that. That's the truth. Because that tells me that my brain is not quite optimum, which happens, right? So you can go over there. You hit the pin and it takes you up to the top. Now, nobody will bother you in the sense you don't get spammed or anything, but there's loads of free education, and I have never seen that much education available. You don't need a quote a guru, you know what I mean? You don't need to join something and pay ridiculous fees. You don't even have to be a Bookmap subscriber. So I think, you should go check it out. Worst that can happen is you might learn something, or you'll say, "Nah, this is not for me." But, so I think free is good. That's what my mother taught me. Free is good. So I still kind of in that ballpark. Anyway, let's take a look. Now in the Trader Lab, so we get the report, right? Okay. Now the report was tradable, but I'm not going to spend much time with this. I want to show you what's going on here. Now this is called the volume point of control. And what it is it shows the volume, right? And let's see what time this is right here, 8:31. So this is the RTH open. RTH starts 9:30 Eastern Standard, okay? So now we know the market's already, they're doing the Acapulco cliff dive, right? Anybody been to Acapulco and see those guys jump off the cliff? I can't. What do they do it for? Give them $2 and they jump into the skinny little gorge? Not so much for me. But it is kind of like trading, isn't it? So here's your volume point of control, right here on the open. Now this is key, and I call this VPOC migration. But there's a few other ways to use it, and I have to put a level. I'm so far behind because of some things that were going on this morning that I was trying to attend to, so I apologize. This is what I call, so the first location of the volume point of control. Now remember, auction market theory. The market auctions. So when the market opens, this is registering the volume. So the first volume is here, and then the market drops down. And let me open it up a little bit for you so you can see it. I just want you to see so you understand the progression of behavior. Here it is. Chop. So here's the volume. Breaks. Volume moves down here. I mark this, and I call it a variable high volume node. So here's what it is saying. It auctioned. Remember, what's the auction? In the micro time frame, right? Remember what I just said when we started the stream. It's an auction in all time frames. Too high, too low, right? Shoppers going, I think this is good. By the way, who'd be buying? You'd say, well, really? Buying? How about profit taking? Aren't those guys buyers? Too high, too low. Too high, too low. Break. Okay, now what? Right in here is where the volume is in this area. Now, I'm not going to get into too much minutia, and watch what happens. Market's going down, market's going down, market's going down. Okay. And now we chop over here. Now, what that is saying, the VPOC moves down. Price check in aisle 3. It's not worth this. That's too expensive. You're in the supermarket. I'm not paying that. I'm going to pay this. Well, what does the market tend to do? Come back and check. Is this really too high? Yeah, it is. Price check in aisle 3. Anybody ever go to supermarket and they send somebody over, hey, check that tuna fish can. Is it really $1.90 or is it 59 cents? Price check in aisle 3. Too high. No, it was really 59 cents, not $1.93. Where do we come? Back here. Price check. So this is the first opportunity for a short. Now and again, I'm just saying, So let's try to see the strategy. Now, if this is too micro, you tell me, right? We'll just move on. Is this useful to see how you engage and how you can manage a potential structural entry? Let me know. Because if this is not good, I'll move on.
ES, long 2P, long 2P.
Yeah, futuristic, that's exactly right. It's really a kind of a cognitive thing. In other words, why would one, think about it. I know when I'm kind of sharp, and I'm usually 2 cups of coffee and a kickstart my Harley. But if I find that my mind is not where I need it to be, in other words, I can feel the difference. It's like I'm a little foggy today. That kind of feeling. Well, foggy is not good in trading because it's about quick. There's none of this. Because if you're a little lethargic or a little tired, whatever it is, and I'm a bit tired, I went 5 hours on the stream yesterday, and that's beyond, my capacity. And then I woke up this morning. I'm just saying, I was like really tired. So I had to work extra hard in the morning, and but I'm alert to that. So, and then I'm up early for CPI and the rest of it. So anyway, this is a price check in aisle 3. So this is in here. Now I'm going to take you into the micro time frame. You're going to probably think, here, let me just try to. Now this is how I use the tool, among other things. This is how, here, I'm going to show you a Bookmap now and how I use it to really try to understand the micro time frame. Because I execute in this time frame, you see? So I want to try, and this is what's called the chart volume profile. It shows you the volume right here. In other words, I'm just capturing the volume that's on the screen, okay? So I can open this up as much as I want to look inside, and that's kind of what I do. All right. Now, I don't know at the time. I see, now I don't know, chop, chop, chop. This is when the volume point of control first time out, opens. And I'm looking, because I don't know if we're going to get responsive buying and, we move up 20 points, right? I don't know, so I'm okay with that because I accept that in trading. But I'm looking for a hint. So here, right here, now this is fractal, right? Now I'm going down into a short time frame. And what's happening right in here is that auction, right? Too low, too high, too low, too high. And again, I don't know how high it might go. I have no clue. So I'm watching for the volume and the behavior. And here's what I see. Right here, that little node is high volume. It is representing the volume right in this structure. Now, it's not an actionable thing for me. It's a informational thing. Now, I'm just noticing it. I'm going, oh, that's nice. Now, here's the other part of it. And this is where the stop iceberg detector comes in, at least how I use it. Buy stops. This is our stop right there, 60 stops. This is what's called market by order data. It's special data. It's available from Rhythmic only, and it shows us, because the orders are tagged, and this is from the CME. So it's showing me 114 selling icebergs, which is not material. That's like a light number. But somebody getting short, that's okay. And these are light iceberg sellers. You can see them. Again, that's not material. It's retail trader behavior that's material to me. So 60, and now we come up higher, and there's 26. So what does that tell me? Well, potentially, so 19, and then I go higher, 6. These are subtle hints, and at the moment, it's only a hint that if we're going up, and the delta, which is these green bubbles, it tells me the aggressor, and you guys know what delta is. It's market orders. Remember, buy stops become a market order. But if the market is moving up, the aggressors are buy stops, and it's not initiative, which I don't know, by the way, at the moment. And then I see the rotation, and there's only 6. That is our good old friend divergence. Remember indicator 101? How many of you trade, quote, divergence? Well, I don't use any indicators, but this is information on order type. So if you want to call it an indicator, but nothing's crossing over, this is real time. So right here I'm seeing potential exhaustion. Now I'm back in the minutia with you guys because trading is minutia in the area of potential short-term integration and execution or triggering setups. Okay? So you guys following me?
VHVN.
ES, pending VPOC alert. ES, pending
So let's
VPOC
look.
alert.
So let's try to read the auction here. Market breaks down. Okay. So this looks like exhaustion now.
EX.
Now, I don't know it at the time until I break below. Now I have this volume here and watch. So I'm just showing you the first opportunity. Now here, the volume now is migrating, and so is the volume point of control. What this is saying, price check in aisle 3 is what we're going to look for, and that this is too expensive. The market is saying this is too high in the short time frame. So now it moves down, and what do I have? I have two opportunities. I have the VWAP to VPOC, and I have this is my backstop, because the market has the potential to come back here and check it. Like, is this really too high, or is this price too low? This is how an auction operates. And you can see the volume here, and this was a consolidation. Remember, I showed it to you in a higher time frame. And now we've left it behind, and now we're auctioning in this time frame. That's what we have. Now let's look and watch. Now I'm looking for a short, right? Where do we go? Here. Here. This is my first short setup. Let's see if it works. And I post these sometimes in our Trader Lab over in Discord. And they're never trade recommendations, but that was the short. Does everybody see the mechanics and the process? Meyer, were you here for the opening dialogue in the stream today?
VHVN.
Okay, then I showed you the higher time frame. I just want you to see what how we align with it, okay? So this was a short. Now, there's another possibility here.
VHVN.
Another potential short here. These are documented as potential opportunities. Now, this down here is a higher time frame target, and again, I have no idea, right? Because we know we don't know. So it's not about me. It's about the auction. I trade the auction, and I have no idea. So if anyone thinks they, quote, can predict the market, they don't know what they're doing. But what I can do is look at behavior and what the participants in the market considered fair or unfair. And that's how we were leaning short against the high of the day yesterday, and we covered right at the low of the day yesterday. And it's not an accident, but it is random. So let's be real, okay? So this is the short. Now I want to show you some other things that happen here. Now again, we have no clue. Now I have this as a target down here, and no idea. And there's other opportunities that are going to arrive. Now what do we have here? Watch. Right here, the market, the volume, you see what's happening? Volume and price are moving together. And that is what creates this movement of the high volume node, because this is an auction. So it was up here, right? Too high, and it moves down. Now I still have a target here, so I'm going, you know. But there's a statistic. Does everybody remember? It's something called the IB stat. The initial balance, high or low, and that's the first hour of RTH. Write this down if you're not familiar with this. It's over 90% probability. Past performance not indicative of future results. Do your own homework. Vet your stats. Right? Okay. So, I know there's a 90% probability either the initial balance, high or low, will get taken out. Given the circumstances and what's going on, I would say probably it would be the low and not the high. And again, I don't know. I'm just saying, right? So I have this as an additional target. So now, subject to time frame, you've never gotten out of this trade and you're holding, or you're going to be working the rotations. I tend to work inside of the higher time frame. So let's look. Now, I have another setup. Again, past performance, not indicative of future result. And it's called the VWAP to VPOC. And it's really a volume-related structure.
Context.
And here it is. Let me show it to you. And there's two targets. And I did post this, I believe. Yeah, I did. In the Discord. And I don't call trades. So remember, I don't do that. I just kind of say, observe potential. So here it is. And this is a triggering structure. So the next potential setup was short VWAP to here, scale, to here, next target, with the IB stat open. So let's see what happens with this thing. We move down. This becomes a variable high volume node. We still have the 3,900 target, and we have the 90% probability of this, right? Everybody tracking.
Honor your stop. Honor your stop.
Watch the behavior. Watch the behavior. Now, again, chop, chop, chop. Volume is moving down, right? This was too high. Remember, price check in aisle 3. If the market leaves this, it has the potential to come back and check and confirm. Let's just see the behavior. And it doesn't have to do anything, right? Oh, look what happened. Anybody see something
ES. Short 2P.
that might be useful in here? Price check in aisle 3. Does this look familiar? This is auction market theory. This allows me to anticipate potential behavior. Now, I don't know what it'll do, but I know why it might do it. And if you understand market mechanics, at least from this point of view, you might have an inkling of where your next trade opportunity might
Mark liquidity. Mark
show up.
liquidity.
And then it's the triggering structure. In other words, it's location, and we call it, interaction, location, the behavior, and the trigger. So how do you participate? Well, for me, I can just be short and never deal with any of this, or I can be dancing inside of these rotations, still heading towards my target. So how many opportunities do I get, you see? And it's really a function of risk management. So here's a short. Price check in aisle 3. They send the guy down the aisle and he says, nope, that tuna fish can is marked too high. Let's come back to the fair price. Okay? Short, target, target, target. So let's see. I don't remember these things. So let's see. Okay. Right here. Did we get it? Right in here. I think we just touched it.
Absorption ES5
Into the liquidity.
3904.
So this trade right here, short from here to here. Now, if this is not your thing, it's only what? 14 points? 12 points? See, I'm good with that. If I'm even a small, and the reason I come at this as a quote for small, new retail traders. You don't need to take a wide stop, in my opinion, but you do need, again, not a recommendation, it's just one way to look at this, at least a 2 lot. And you should sim, of course, and get statistics. The reason for a 2 lot, the job of the first contract is to get the risk off. Then do you get to the target before it comes back and the structure you lean on has failed, right? Is that logical? So we break below, price check in aisle 3, too high, break down, pull back. I have nothing to do. Target is the initial balance low. And I anticipate 2 things. At the initial balance, profit taking. And potential counter rotation. I still have my 3,900-ish target, sitting out here. So we'll see. So there's the IB stat, 90%, thanks for playing. And now I don't know. 2 possibilities. We expand the range and we go down to another target down below, or we revert back in and squeeze. So let's see. Now at this point, I am done.
VHVN.
Watch. Back here, price check. Now right here, if the market's going to continue lower, this is a price check. If it's going to continue lower right here, it can come back, check, and it needs to get below here to potentially accelerate. And remember, I know I don't know. So I'm just going to show you these. Watch. So now we have the primary target. And again, I have no clue. Now for me, I'm good being done with the trade. You have to understand. This is another setup. But this is your obstacle. So if I was taking this one, and there's nothing wrong with this, if this is part of your, and here it is. Chop, 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 break low, pull back, right here, potential short. Right here, potential short. You can see the structure, microstructure. Look at the structure. Chop, chop. Now, if you can't deal with this one, I understand, then you have the chop, break high, break low, you see? So there's other ways to get in. Now, this is fast traded. And if you want to operate in this, this is not a newbie thing. You have to have unconscious competence to be able to react to this. Here's the hint. Rotation, 2 buy stops. That's based on the delta market orders, right? Crossing because it's a stop. Exhaustion. You see? Below here, price check, too high. Where's the next area? Down here. So I'm just saying. Is that enough meat on the bone? If not, it's not your trade. See? But I want to show you structure so you can understand what you're seeing. Now what? Too low, target. And again, I don't know, but once we come back inside, I'm done, other than rotations. So let's look at this potential squeeze, and let's see where it goes. Let's see.
VHVN.
VWAP, potential back to VPOC, but we have to look. Now, the context, which is down, is changing. Let's look.
Long midpoint reversal. Long midpoint reversal.
This is a potential short. Now, I can't execute on this because I have rules, right? Trade plan. And it's VWAP to VPOC, which would be here, and then here. So this trade is structural, but it did not set up because I wanted to pick these stops off up here. And in this time, because we're back at it, so this trade didn't fire unless you have rules that allow you to trade it in here. But this is your scale, and then the IB low is your target. So your trade, this is what's called mean reversion. Different context. Remember we talk about context, right? Is everybody with me?
VHVN.
I reset everything at RTH open, so all of these are reset to RTH open, and the VWAP also. So you can just, and you have to put in Bookmap, if you're using Bookmap or any other software, you have to be sure that the reset is RTH and not session open. Session open would be like ETH open. You know, so you have to have a reset. And for me, I need the stocks trading to get what I consider an accurate picture of the, you know, I need the basket basically trading so I can, because it's all reflected in the price. When we're trading ETH, we're pretty much trading, you know, we're not trading, we're trading Europe, you know, so, and that's just not the same, you know, so I want the volume. You know, so anyway, I hope that answers your question about that. Yes, I do, Jeff. I use RTH, VWAP, and VPOC. Yeah, and because, and the reason I like VWAP and VPOC is they're derivative. They are volume based. I only use volume. I use no indicators, and I use insight on retail trader behavior. That's the other part of it. You know. It's really important to me because our primary adversary is the other retail traders in multiple time frames. So that's who our main, adversary is. So I'm trading against, and so are you. You're trading against them. Now, when the higher time frame participants come in, we basically are hitching a ride, and that's where the outsized rotations come. It's not us. We don't have that firepower, but they do. The guys with the 100 lots and bigger, and the hedge funds and the banks, all these guys, they're not in our game at all. We are nothing to them. But if we can detect them or the levels that they are activated on, that's where these outsized moves come. And as a day trader, I'm always looking to position in the market, and when I have outsized rotations like this, it gives me a lot of opportunity. But I'm using the same process. Even if we had 6-point swings, it's not up to me. It's up to me to follow my trade plan. And then when the outsized rotations and the higher time frame participants come in, that's when we get major moves, and that's when it really pays. When it's shorter time frame rotations, we don't control that. All we control is where we execute the interaction. And in the auction, we are seeing a generic process that works across all time frames. That's why I'm showing you higher time frame. And when I threw this chart up, and I'll throw this up again in case any of you guys missed this was yesterday's levels in a higher time frame. And we traded these live, not live, but I'm saying as I streamed them live. 41.15 was the area, and I was on shorts only. And we were trading rotationally, so it was short rotations, and we indicated in the stream that that this energy, this is a consolidation. If this energy releases, the next target was this, and this was sitting here, and it was on my chart. I don't know. What I know is I couldn't be a buyer all day yesterday, so I was just a seller. So is this a high time frame move? I think it is. I mean, at least for me it was. Now, there's higher time frames than this, right? But I'm trading inside of those. But I knew that if we broke out to the upside, this was my target, and that's on my chart. If we came out of the consolidation this way, then we're going to come back to the high volume in here. That was yesterday. Now, 3,900 here is the next high volume area of merit. And then down here in the higher time frame, we have 39.86. That was a low volume area. Take a look at this. This is like the year low right here, okay? And we consolidated in here and then broke out and consolidated. And what this is an auction. Too high, too low, too high. And you got participants on both sides. Well, all that energy, which is basically fuel, stops, right? Under here, and this happens in all time frames. Now, when you break out, that's a big move. So I'm always thinking of the higher time frame, but I have to operate in the shorter time frame. So this was a great day, right? I mean, in our trader lab, they were throwing a party in there because many of them who have been participating, and this takes months to kind of get your head wrapped around this specific way of thought. It's different. And when you come with beliefs built on other ideas that may or may not work, it's not about one way to do anything. It's about integrating an understanding of market mechanics. And I think a lot of traders put their energy into an indicator, but they never understand or learn about how the market works, because they're using something like plug and play that doesn't require understanding other than a line crossing. And then they try to integrate it in multiple time frames using whatever, a daily, a this, a that, it crosses, which is all fine if you have a positive expectancy and you're a positive trader. I have a different view, and that's only because of my experience, which doesn't mean it's right or wrong. I don't have a judgment, but I do have something that I see works. So I kind of stay with what works. And the thing about this is it responds to the volume and the interaction of the participants. It's not mathematical. It is basically volume based, and that's what a profile is. So this was the next target yesterday, and there's the low of the day. And let me tell you, coincidental except not really. Okay? So where's the next area? 39. See the high volume. There's the other high volume down here. and we have it over here. So, I mean, the market can come down here. You see the high volume? It can come here. We're below this one, so now we're into this fat, you see. So now I'm looking over to this one. So this is the multiple time frame. This is where in this auction in here, these levels right here, was where the market thought, yeah, fair. And it left it. And it come down and test it, you see, and leave it. Come down and test it, leave it. So I know as the auction progressed after this outside reversal day that the market was auctioning down here. So that's where the 3,900 came from. Okay? Now the fact there's a lot of lines on here, I look at these and I look at what creates them. It's not the fact that a computer draws a line. That is not how this works. It's what the behavior was and why this was created. So I hope that makes some sense. And that's a different topic altogether. But what's important is understanding, ways to organize information, and then it's what you do with it, And again, for me, I'm operating in a shorter time frame, not because that's how I want to trade, it's because that's how I want to initiate and participate. Anybody have a question about that? It's kind of philosophical, but it's also practical. So let's look what happened here. I'm not even paying attention. See what's going on. So I think, once again, here, chop, chop. Now this one didn't reach, so nothing for me to do. If I'm an aggressive trader, sure. But I'm not, this is not what this is about. And it isn't even about what I might do. It's about creating trade plans that are disciplined to wait for your bust to show up. Because if you start swinging in the middle, you could get a little head fake. It could come up and take out the stops because retail trader behavior and then rotate down. So for me, if it doesn't get to a location, that's fine. It's just not my trade, right? If we can't get back here, it's not my trade. This is what's below. This would be the potential target for rotations, or you're done.
ES, pending VPOC alert. ES, pending VPOC alert.
So let's watch the behavior. Nothing to do. I wish there was something to do. But if you're disciplined, you'll know when it's not your trade. It's like the right bus. By the way, based on everything we've done here and what I've shown you this morning, do you have any questions? The higher time frame composite is all the volume for the year. The one on the right that I was showing. The interday, I should say the micro composites are the balance areas or consolidations using daily bars. So wherever they overlap, I kind of look at it and it's kind of judgment, but it's not complicated. Where'd that thing go? I'll show you. Let me just show you. As long as we're in park at the moment. Let's go back and look at this thing. So this is all the volume, and actually this is all the volume since January 2020, but really all you need in this is, so I have the whole year, or actually from 2020. So I've got volume in here, in this one, below, okay? But I'm concentrating on the daily bars. So, and it's kind of easy if you think about it. This is what's called balance. And another term for balance is consolidation, right? So I'm using the same process fractally. When you see me with these little triggers in the micro time frame, isn't it the same thing? See? Chop, chop, chop. And where's the volume?
ES, long 3x3, long 3x3.
So I'm really doing the same thing. And then I'm going back to the other area. And what creates these? See, what creates the volume is the perception of fairness. In other words, in this whole consolidation, the highest volume was right here. Right there. The top of the hand. The orange, I guess. And that's called a microcomposite VPOC. In other words, these are microcomposites. This is the highest time frame. All the volume that has taken place for any trade that's been at this level since the market has been here. And I pull it all in. So this shows me the auction
VHV.
in the highest time frame. So any trade that took place over here since 2020
ES, pending VPOC alert.
is here.
ES, pending
And you can
VPOC
see, you
alert.
see what it looks like? This balance. This is balance. And so, and balance is characterized by that low volume at the outside edge and the low volume
ES,
at the
pending
outside
VPOC
edge.
alert.
I don't have it on here, but this one was created by a consolidation off the screen. And we left it behind. So now we're in this area here. After being below, we come back and check this, and we consolidate. Now, one side's going to throw the towel in. If the sellers did, this would be the target coming up. If it's the other way, this is the target here, and this is what we did yesterday, which is why once we were trading below here, and again, I don't know, it was intraday, short-term time frame selling against this, and remember, no longs yesterday. And then we got this. So rotational during the day, which is both sides are active, right? Two sides were battling it out yesterday, and we don't know. But when it broke and took out the first hour's low, then it went into a trend configuration. We have a setup for that. And those who follow the trading plan that we discussed in the Traders Lab were short under the first hour low. And actually we got short around 85. I think it was on a counter rotation into the stops. So it was, I think, 85 down to here. And it took about, what, 60 minutes, 90 minutes for that trade. And there was a lot of partying going on in the Trader Lab. And you know what? It's luck. Because if you don't think there isn't some luck and there's a random distribution in trading, then you haven't traded long enough. Because it's just statistics. And in the end, it's going to be over a large sample size what your outcomes are. So I hope that answers the question. And Meyer, this is for you.
ES, pending VPOC alert. ES,
And others.
pending VPOC alert.
Because when I talk about multiple time frame, I really want you to understand. I really mean it. So this is chop, you know. Again, this is not my thing. Now, intraday, these are trades.
ES,
But they're
pending
risky
VPOC alert.
because where's the fair price? Well, we're probably going to shift down here. And if now we're ping-ponging. So we can come up here and check, right? Price check in aisle 3. We can squeeze the shorts, you see? So I don't do anything in this. Now, if I'm a scalper, this is a short for me. But that's not my thing. For me, it's location and alignment. This is like in the middle of traffic playing it. This is like running around in Midtown Manhattan, running across Park Avenue during rush hour. You know, it's not my thing. But I can look at it structurally and narrate it. I can look at this and say, okay, this has the potential to counter-rotate after a retracement or squeeze retail traders who are running their stops over here. That's the facts. So let's observe triggering structures, not trades. And again, if you're new here and you're in YouTube, by the way, I want you to see the structure. This is how I trigger. Now, I'm not saying it's good, bad, or indifferent. You got to find out. But this has to be at a location, which it isn't. But if you are a short-term bandit, you might do this. And this is not for someone new. This is for someone that is confident, competent, has statistics, you know, and has a positive expectancy. If you don't have that, then this is not your thing. I consider this advanced, and if you're not already profitable, then this is not your deal. So let's look at the structure. Chop, chop. Now, you know, this is very choppy. But here's how I use these. Now, I don't know, you know, is this a selling structure here, right? See, I don't know. But here's how I do this. I'm going to show it to you. Chop, 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 break high, right? Break low. Okay, there's my trigger. I look at the volume inside. I'm going to show you the volume inside. These are trigger structures. Now, I don't do this in the middle of nowhere, you know. You can, if that's your plan. Me, not so much. But I want to show it to you. So let's look at the inside of this thing. And now I'm in the micro time frame, okay? And Now remember, I'm showing you the trigger to show you what you might observe at a location. So let's look.
VHVN.
Whoops, didn't mean to move it like that. Come back here. So I'm looking in this structure right here. This is where the volume is, right in here. And you can also see it here, this little node. Now again, I have no idea until I get the break. Now I have a reference, this micro volume, this micro volume. And again, this is not your thing, it's not your thing. But the reason I go into these is because it's generic. If you're trading 15-minute time frame, daily bars, consolidations all look the same. So that's kind of how I look at these. And I developed them because as a retail trader, I don't want to take a lot of risk. Why? What for? But now, I mean, it just ran away. I don't have anything to do. It's a retracement. This is how consolidations tend to work. So let's watch if we get it. I don't remember again. I think we did. Yeah. Watch. So this is the over-under. This is the volume is right here. Top of the arrow. So that's the area. And this is acting like a VPOC. It is the same as this, except it's in a micro time frame. Can everybody kind of get their head wrapped around what's going on here? So this is in the developing daily time frame. And I use those, and you saw for behavior. This up here is the same in a shorter time frame. Is everybody with me on the concept? Meyer, it suits my psychology, Meyer. That's why I trade like this. You know, if you've watched my video, I was a system designer. I traded systems. I was a swing trader, 2 to 3 day swings in the large S&P, $250 a point, and trend follower when I was trading currencies, currency spreads, the rest of it. I did a lot of spread trading. So Meyer, I've been there, done that. But I sleep much better, and actually I have more opportunity with rotations than I would for the risk. It's really interesting, but it's an alignment mentally. So I have more alignment for me. Now, it doesn't take away for someone who wants to throw a trade on and hold it for whatever. But if I was doing that, I might be trading ETFs or something, So since I'm trading a highly leveraged product, for me, I use the microstructures so I can have more contracts on with tighter risk management. But yesterday is an example. I was trading the higher time frame. I'm always trading inside of it, and I'm always conscious of it. So, but it's different strokes for different folks, But you might get something out of this, because in your time frame you will see the same structures. But if you're in a higher time frame, then the risk is higher. Or use time-based charts. I don't. So it's just whatever floats your boat. This is our structure for a short in the micro time frame. See? This is a structure for a short in a micro time frame. See where we went? Back to the volume here. So there's again, this is not one of mine. I wanted to show you the structure, you see. This is one of mine. And if you download the PDFs, it's documented clearly. I wish I was looking over here, but you guys already know. This is what I'm trading. Price check in aisle 3. So it's from this to this. And then hold. Right here. Location, structure, break, and then your short is up against this volume in here. And here. Your stop needs to be above here, And your scale is down in here. I mean, not your scale, your primary target, I should say, is return to this. So if you can get short in here against this, this is kind of a short, and this is not a recommendation. Naturally, this is just behavior. See the behavior. Is anybody seeing anything happen over and over again? So the potential is back to balance. Price check in aisle 3, too expensive. Back to the fair price. Then the potential to come down to the other side for the unfair price and stay in balance. This is now a mean reversion. You see, that's what's going on right here. Mean reversion. There's the target. And then potentially here, or not, doesn't matter. Does everybody see this process? Now it's how you want to slice and dice it.
Short midpoint reversal.
I've already got my target below. If we break out under the low, I have a target below there. Otherwise, we are potentially going to be rotating. And as a shorter term trader, I can be picking these off, you know. And if it's not enough range, you don't do it. It's very simple, you know. Like anything, if it doesn't fit your plan, then it's not your thing. This is my thing. Because this is what the market is offering me. That's why it's my thing. So I can trade this to here, to here, or under these swings. You know, you don't have to go all the way down. You just go whatever your trade plan tells you. Let's observe the behavior. Is everybody tracking? You have any questions? Kind of see what we're doing here? Well, Meyer, I don't know. Well, I could tell solitaires. I don't take the longs because of the context. It was like yesterday. I never went long. It was just selling, and that's because of context in multiple time frames. So I'm thinking in a high time frame. Now it is possible somewhere along the line that we're going to squeeze. I understand that. But in the interim, I'm trading the auction, and the market is going to try to locate too low. It might have already, or not, but I can't be a buyer, and I can't. And here's the other thing about that: if the market takes out whatever the high of this rotation at 15, I have a plan that I can execute. But I'm perfectly satisfied never going long today. And when it's time not to be short anymore, I'm good being done. It's not that important to me, you know. I don't try to pick the bottom. I let somebody else do that. And they deserve, for the risk they take, to be rewarded. If we go into two-sided trade, which is balance, which we're in now, I trade it like I am. I'm trading outside in. And if it changes, I don't need to get long. But I might. See, yesterday, it was outside in mean reversion only. I was trading back to the mean. And with an eye on a potential breakout, which I have no idea. Once the conditions change, and that's all about context, then I changed and we got shorted, what, 80 or 85, somewhere like that, and took it all the way down. That's okay with me. So it's about, you know, and it's not what I do. You know, I'm not saying this is the right way, best way. I have no opinion on that. I think what really matters is when the dust settles at the end of the day, does it work? And it has to align with your psychology. That's the other thing. You bring beliefs here. And there's some traders who believe that this is not for them. And you know what? It's the truth for them. But I think about retail traders. They don't have deep pockets. If you don't have a deep pocket, then I don't know if you want to take a 10-point stop on a trade. With a what? How are you going to get risk neutral on that? You probably need to trade multiple contracts. Well, that can add up. You know, so I just have a different approach.
Buyers at 39.06.
My approach is really for traders and everybody when they start out. And remember, I'm not an educator. I'm not a vendor, right? I don't do any of that. I have no interest in that, and I don't need to do it, you see. So for me, but I do this because of what I went through. And if you watch my video, you'll get a sense of my journey in trading. And when I started, there was no information. You guys are have the opposite problem. There's too much information, and you can't sort it out. That is the problem. So there's no magic indicator. There's nothing like that. It doesn't exist. So
Market liquidity.
it's
Market
really, many traders never get to understand the market and why it does what it does. Most of us, when we start out, we think an indicator is going to tell us what to do. And then we want to, quote, learn how to use the indicator. And we spend maybe years trying to find a consistency in an indicator that's looking back in a market that is not consistent. This is the target, by the way, ahead of here. So I'm okay with this. This is a structured trade. Short, your stop is here. Once we break here, if you want, you can move your stop here. Your scale is here. Your target is ahead of this. If anybody thinks that's not enough range, then don't do it. For me, all day. How many of these do you think you might get in a day? How many have we discussed over the last couple of minutes? Right? Now that is a function of time frame, and it's also a function of what the market is making available. I don't make that choice. I just trade what shows up per my plan. And I'm not defending anyone who, my approach. It's not that. I just think it is not understood.
2.5.
There's my target, and it doesn't matter to me if it goes down another 80 points. You could do this on a 2-lot. Is it worth it to trade a 2-lot in this configuration? Maybe a 6-point stop on 2, not on 1, on 2, total of 6 points to get down to here. You guys tell me. Yeah, Matt, you can spies, Qs, absolutely. It's all generic. I mean, I have traders that are trading options off this that are here in the trader lab. I have guys who are trading ETFs and guys with spies and Qs. I have, all kinds of guys. And the other part is I have traders who trade on Q using this process. It doesn't matter. This is generic. You want to trade crude? It's this. You want to trade gold? It's this. You want to trade a pork belly? Knock yourself out. It's all the same. Auction is the auction. The market operates the same way. It's just the function of the market. This is the basic core behavior of how a market operates. And most traders never get to the point of really knowing what's going on and what the market's function is. They go down these rabbit holes of indicators, Fibonacci, Elliott wave. And by the way, I've done that. So it's not that I don't know. And I'm not even critical. I'm saying is they put themselves into these multiple inputs that have a randomness to them. And the randomness creates an inconsistent process that can't be quantified, that can't be measured. And then if you can't measure it, you can't replicate it, and you're out of luck. You're going to become potentially a statistic. And not a good one. So that's why I'm doing this, because I think we can keep it simple, and if it's simple, you're not going to have this conflict looking at multiple inputs that are not aligned. Now maybe and if that's not your case as a trader, then more power to you, because now you're a successful trader. But if that's not the case, then you might want to have an open mind to a different thought process. How you wrap it all around, to get some kind of consistent input. That's not, this is just parts. I use no indicators, so it doesn't mean anybody else shouldn't. But I found the indicators were an obstacle. And after designing trading systems, when we're talking programming, creating indicators, and all this other kind of stuff, and having software that does optimizations and stuff, which I did. And I left that all behind. But I will tell you, I spent years, not weeks, not months, years, with different processes. And I would like to tell you I could have got the answer quicker, but nobody had the answer that I was aware of, because there weren't, screen traders were not, were a minority, So at the time, it was kind of like they looked at me like, what are you doing, And most of the guys that I know, the traders I knew were floor traders, so they, this was not part of what they did. They're in a whole different business. So there was no support and no information. Anyway, that's one of the reasons I'm motivated, because most retail traders will never get a shot, because they're going to run out of time and money before they actually ever get past the noise that's out there. And if you guys have been doing this, you know what I'm talking about. If you're new over there in YouTube, invite you guys to come and to the Trader Lab in the Bookmap Discord chat room. Pinned to the top, there's about 80 downloads of PDFs of my trades that are meticulously documented that you can study. I'm not recommending them to anybody, but they might be a basis for some thought. And it might save you some time, because it will help you learn the auction in different ways of interpreting behavior that might become actionable. But you need to vet all ideas, no matter whose they are, mine or anybody else's, for me, I think you don't have to go down the path I did. But it does require that you open your mind. And a lot of us hold and defend processes because we, quote, want to be, quote, right. The market's the only truth. A trade is just one of many if you have some kind of statistical edge. And part of that need to be right comes from ego and, other things, in the external world, getting approval, right? The market's not here to tell you you're a good boy or girl. The market is here to find a fair price, and that's why it's going up and down here. It's looking for a fair price. And if it can't find it, it will move away from this area and try to find a buyer. And it may do that, But in the meantime, I have locations of auction-based behavior. And I understand why this happened. And if you understand the function and the behavior of the market, which tends to repeat, because what is the purpose? It's the auction. That's why this is auction market theory. It's coming up here to say, this was too high before. Is it still too high? Or is this one down here too low? And now we don't know the answer at the time, but we know as the trend is down and there's sellers, well, which would you rather do? Be buying this, or would you rather be selling that? For me, outside in, mean reversion. Sell, back to here. Then where? Back to here. My downside target already hit. Here. By the way, if it takes this out and goes south of the border, good. Not my trade. This is my trade. Here to here to here. And I told you that, what I'm saying is I shared that thought with you before it happened. This is what it's called a setup, right? I don't know what else I can share with you other than just a process that might give you something more than you have today. And then it's your job to study, research, and understand. Remember, in my hierarchy, here's the most important element and the most misunderstood element. Context. The context is down. The market is auctioning in all time frames.
Absorption
Until it
ES
changes,
sellers at
my
39.07.
job, since the context is down in the higher time frame, but is rotational and mean reversion in the micro or more interday time frame, is to sell the outside back in, staying in alignment. So the micro time frame, I can read consolidations and triggers. In the developing time frame, it's mean reversion, which is outside in alignment with the higher time frame. And Bookmap is where I can execute because it's a tool that allows me to see inside the more micro time frame using the same process across all time frames. This is what gets traders in trouble right here, among everything else.
Sellers at 3,902.25.
So for me, no long. Somebody else, welcome to it. For me, until it changes, just like yesterday, no longs. And at some point, it might change, and whatever that last trade is I take, that's going to be taken out because the context shifts, I'll pay for the privilege. And I'm glad to do it because along the way, I've been selling. And those trades add up. Just making a small point. I hope this makes sense, and I don't want you to think it's anything more than trying to make a subtle point, because that's auction market theory. And this is the key, this. So if I take this out, it opens the door and I change. And I have targets below. Now, and if that happens, I can change on a dime. But until it does, this is what we got. And as long as, and so that's my context in the intraday developing time frame. Can you kind of see fractals in what this is all about as far as trading in multiple time frames? Now, if we break out of this, I'm not on it. If you're going to ask me, does that bother me? Absolutely not. Because I'm trading a specific context with specific setups. So that's why this is the target. And again, we break out under here. I turn the tanker around and I go into a different mode, potentially, or not. Or I just say, okay. But how many trades? Now, I haven't talked to you guys about this morning. There's more, but I think I can stay right here, right now. I don't need to do anything more than what I've already shared. And I will tell you, I'm just going to say there's more, but it's the same process, you see. So let's keep an eye on the behavior. But if you have questions or you want the PDFs of all these setups and processes, there's a link in the bottom of YouTube that'll take you to the Bookmap Discord chat, and you can join and take advantage of the Trader Lab, and you're all invited. And what we're doing here, and by the way, in Bookmap, the education is not just what I do, or there's other futures traders, there's options traders, there's crypto, stocks, whatever your interest is, multiple time frame traders, intraday traders. I invite you all to come and hang out, visit, free is good. And you can also download my PDF. Now, if you're also new, there's a link to my foundational video. And if this is really like, you're looking at this and your eyes are rolling back in your head, which, by the way, I understand completely, watch the foundational video. It'll really save you a lot of time, and I think potentially accelerate your understanding of how the market works. Jonathan, I typically use limit orders, but it really doesn't matter.
Mark trade zones.
IB alert. IB alert.
Oh, there's JL Obama with the 12-to-1 stat. JL, I can depend on you to bring it up. there's a possibility this will flush and go kind of extreme and then come back in. I have no idea. And I don't concern myself with that. I just kind of trade structure, and I can be very happy trading these rotations all day. I mean, and the thing about the rotations it's the range. And if you guys have been following the stream, it's the same process if we have 6 points or we have 60 points. I don't do anything different. So the range is a variable, but the process is generic. And I'm overlaying time frames, so I'm trading, as I always like to describe it or think about it, as inside out. So I'm trading inside a higher time frame, but I'm using more microstructure for risk management. So I'm not interested in taking a large risk on a trade. I'd rather take a stop and get repositioned for a swing, because my thing is not about being right. It's about risk management, number one, and then the potential rotation. And this was my rotation, was to here. And then after that, it doesn't matter. So, Now, and this is based on a 2 lot.
Check context.
If you're running a 3, it's different. All that's different is scale here, hold the runner. That's like what I remember in American football, the Hail Mary pass. And that's okay too. And then you can have your stop wherever, if you're entering up in here, then your stop, could be wherever you want, subject to your trade plan. But there's a possibility here to come back here. So again, I have no idea. So for me, if you're a small trader, think about this, a 2 lot. Now believe me, this is small. Is this enough range to justify, let's say, a 3-point stop per contract? 6 points, let's call it. And this is not the micros, this is like, the minis. You could do this with the micros. And before you do it anywhere, you do it on sim to develop confidence in your understanding. Because if we all have fear. I experienced that trepidation because there's that part of me, I'm wired for fight or flight, right? I mean, remember, our survival instinct is don't step in front of the bus. And when you're taking risk, your mind is going, hey, you're stepping in front of the bus, get out of there, right? So there's that emotion because chemicals are automatically triggered in your brain, and that can swamp your intent. Well, if you've been trading a while, you recognize it, and you've kind of made peace with it, as opposed to fear taking over logic. There's no logic when a bus is about to hit you and you automatically jump out in front of it, right? Or not in front of it, away from it. So that part of your brain is not operating. It's the, oh my goodness part, that automatic triggering, you see, survival. Your brain is not familiar with trading. Your brain is still a reptilian brain from back in the Stone Age when you were running from the saber-toothed tiger. So we get those triggers in trading. So if you're feeling that, that's normal. What you do about it, you should be journaling all these emotional states and then review your journal and understand the impact they have and see if they're misdirected. You know what I mean? Like, gee, why did I grab the mouse and bail out when it went 2 ticks against me? Why? Fight or flight. You see? Or the need to be right, like it's an approval thing. That is not trading. Trading is like its own little universe with different rules and different things. Yet we're bringing all this from the outside, and that's where this belief thing comes in. You need to change your beliefs, and yet we're not conscious of those things. We're really not, because that's what works out there. When I say out there, I mean out of the trading world. The trading world is its own planet. It's like you just beamed into someplace. And so you need to write and journal your feelings, the impact of those feelings. Because the emotions, after you understand and you take the time to develop a trade plan, if you can't execute it, why? Well, it's the emotions collide with your intent. But they will overwhelm your intent. I hope that makes some sense. Meyer, the fact you don't agree, I have to tell you, that's fine. There's no debate here. But if you have a large account, you're not the average retail trader. This is intended for new traders who want to establish a career. If that's not you, then, this is probably the wrong place for you, because that's who I'm speaking to. Those of us who are struggling to create something in a future in a business. If that's not you, then, you're kind of speaking to the wrong audience, You're certainly entitled to your opinion, and it's welcome, but you're not in alignment with the intent. So we're always going to agree not to agree. Yeah, Mayor, is Mayor, Mayor, M-I-O-R, are you M-E-Y-E-R? I'm just confused.
IB alert. IB alert.
Oh, okay, Meyer. Well, welcome. But I hope you understand the intent of the Trader Lab. Again, if you're in YouTube, come on over to the Discord. Bookmap Trader Lab PDFs for download are over there. They're nice and clear, and you can study a lot of iterations of different structures. There's many different things you can do. I'm showing you just the current opportunity based on what's here, and I'm not calling trades. I don't do that. But I think if you can understand market mechanics and behavior, you're going to have something that other retail traders have no clue about. And it's your main competitor are other retail traders in this time frame. We are not competing against algos and the market makers and all those guys. That's not what we're doing. We're trading against us. So let's try to do something different than they do. That's it. And let's have a better understanding of why the market does what it does. Then it's that integration of potential behavior. See, this is a triggering structure here, but it's not at a location. But so here's another thing to write down on your sheet. If this, then that. If not, then what? See this? See this? See the volume? Watch. I'm going to show you triggers. Now, these are not setups per se, but if it had alignment, it might be. Using the term might, but I want to show you as much as I can. So if you can isolate these things, when you see them in alignment, the key being a location. See, the thing with a setup is it's not out in midair unless you're really a highly skilled individual who can dance in mid. It's like almost dancing without a net, or diving off a cliff without a net. But this is a consolidation, break high, break low. This is a triggering structure. Now, it's not at a location, nothing to do. Here's the other thing. 56 stops going up, 1 stop, 4 stop, 1 stop. There's exhaustion. This is the delta, market orders, and you can see the delta right up in here also. See this? This is the delta. This is showing me the buying. All this is showing me is this delta. I'm just showing what the indicator is. And it's only an easy way for me to see what I already see in the bubbles. But it kind of puts the contracts together over here, so I kind of can look at that. And it's not material. It's just sort of, I threw it on and go, let's look at that. Because what it's doing is all it's doing is taking the volume here and dividing out who the aggressor is in this volume. That's basically. So it's looking at the buys versus the sells and who's the aggressor. So that's delta. So it's just keeping track of the delta in this volume. So there they are. So you know what that is. Again, I don't do anything with it, but it's over there. So here's the break. Chop, chop, break high, right? False break, break low. Trigger. Now, it's, again, this is not actionable. I want to show you the behavior. Let's look. I'm going to look inside, okay? This is micro. This is not Meyer's favorite thing, which I understand. No problem with that. See this right here, this volume? That's what took place in here. High volume. And this is an auction in a micro time frame. Watch. So too low, too high. Too low, too high. Now, it's all this volume in here, here, here. It breaks below. This is an auction. It's the same thing as all of this, except it's in this time frame. So we break below the volume. So we have volume there at the top of the arrow, and we have this volume here, which is represented by this auction, micro, this one. So that's where this comes from. So let's look now. The market is, and that's a consolidation, which is an auction. It breaks out. If it pulls back, it checks it, then there might be an opportunity. Here. Let's see. See this? Is everybody following? I'm showing you behavior. It happens in all time frames. Now it has to align with your plan and locations. The thing about this is you're going to see this all over the place. And what I'm going to suggest is that you don't become some wild person that tries to trade these. I suggest is you narrate and see repetitive behaviors and develop the confidence. You take a screenshot and you go, okay, what creates this? You need to understand what it is. What is the potential? And that's all you have, potential here. What is the trend? Down. Shorts, right? Not longs. At least for me, you know, up to you, what you do. Me, I'm not so bold, you know.
Long midpoint reversal.
So back to the volume. Here, right up at the top of the arrow. There, you see the little line? Is this a coincidence? This is the auction. And the next layer is the little volume up in here. So I'm looking at the volume in this, and I'm looking at the volume in this. I'm looking for a retracement. If it never happens, it doesn't matter. I'm sitting here and I'm going, now what? Retracement. Right back to the level. Chop, chop, chop. Break high, break low. So you have retracement here, and you have your execution in here, or in here, with a stop over here. 4.5, hey, you're in at 3. The worst price in this swing, 6, 6.5. So, and what do you have here? Retracement. To where? Here. Volume. There. Fractal. Stop here. Is everybody tracking?
ES, pending VPOC alert.
Anybody have a
ES,
question?
pending VPOC alert.
DHVN.
Is the story changing any landmarks?
ES, pending VPOC alert. ES, pending VPOC alert.
Michael, if I follow my plan and my plan doesn't get me on a trade,
Pending VPOC alert. ES, pending VPOC alert.
I have to understand the reason. If it's not part of my plan, I have to maybe get a different plan, or at least try to learn. You know, it's a function of what your plan is, and your job is to follow your plan. If you, for some reason, it's in your plan, that's a different issue than you don't have a plan for it. I mean, do you know what I'm saying? I see we have a retracement back to the high volume node. Let's go take a look at this thing. To the VPOC, I mean. Here, watch the structure. So this trade, this one, is back to here. That's okay. Let's look at this one.
Absorption ES sellers at 3,907.5.
This is the location to potentially interact. You have to look out for a squeeze though, because now let's look to the left. Let me show you. This is where it gets kind of interesting. Of course, it's always interesting. So this was a short, remember? This.
ES.
Watch.
Pending VPOC alert.
So we have a couple of
Pending VPOC
things
alert.
we can do here. So this was a check, back to here. This is I think it was here, was a scalp, but not a location, just structure, back to here. This we have to be careful of. We can come back to here, to this outside edge, or not. Where's the stops? Now we got to think like a retail
ES.
trader and not
Pending
act
VPOC
like
alert.
one.
ES.
VH
Pending
began.
VPOC
So
alert.
right in here, we can come off, but retail trader behavior.
ES.
We have to
Pending
watch.
VPOC alert. ES. Pending VPOC alert.
So let's just observe this thing. If I'm going to be looking in here, I have to be careful because
ES.
the stops
Pending VPOC
are
alert.
above here.
ES.
If I
Pending
see
VPOC alert.
exhaustion like I'm seeing now, I have a potential opportunity to observe, right? This is where I'm seeing exhaustion right here. So let's see if we get a rotation. Not a recommendation, because
ES.
trades are
Pending
all
VPOC alert.
random.
ES. Pending VPOC alert.
What do I have? Chop chop, 9 stops, iceberg selling,
ES.
iceberg
Pending
selling.
VPOC alert.
I want to observe
ES.
this
Pending
behavior
VPOC
here.
alert.
If it starts moving up from here, I have nothing to do because now there's the potential for the squeezeteria. I want to see potential exhaustion.
ES.
So
Pending
let's
VPOC alert.
watch.
ES. Pending VPOC alert.
Outside edge. Stops are going to be up here.
ES. Long Nichols. ES. Long Nichols. Check context. Check context.
I'm looking outside edge, mean reversion. So let's see if we still get it. Time of day, lighter volume, potential for squeeze. We tend to get that over lunch.
Pending VPOC alert. ES. Pending VPOC alert.
Getting my lawn
ES.
cut.
Pending VPOC alert. ES. Pending VPOC alert.
There's a trigger. Let's watch.
VH began.
ES.
See
Pending
this?
VPOC alert. ES. Pending VPOC alert.
Now this is an obstacle here, so this might not fit your plan. Is it outside? Low volume node, backed by high volume right here. So this, theoretically,
Yes.
it has to get below here. So this to me has more risk to it because this is an obstacle.
VHVN.
So, you know, that doesn't fit, but we can study the behavior. And then the trade has the potential to roll down here. But see, for me,
ES.
I have everything but the
Pending VPOC
range.
alert.
So I
ES.
cannot get risk
Pending
neutral
VPOC alert.
because I can't execute out here. You know, wouldn't it be nice? But no. And even then, this is my obstacle. Too high, back to the fair price. If this was lower, this is my target, you see, for my scale. Or out of the trade, you know, it's subject to your trade plan. If I was trading a one lot, which I cannot do, I'd be done here. But I need enough points to cover my risk, you know, which is above here. So the distance from entry to stop is my scale, minimum. It can be
Yes.
more,
Pending V
but
on
I'm giving
alert.
you some minimum
Yes.
parameters.
Pending V
I
on
want to
alert.
get risk neutral. It's my job, at least for me. So you see what we did, the behavior back here. Now, if we had 6 points, that's okay. This, I can't do it. Is everybody tracking? But I can read the behavior and see it. This is auction behavior. Now, because it's outside in, mean reversion.
Yes.
I can't
Pending V
operate
on
in it
alert.
though.
Yes.
The beauty of
Pending V
this
on
is
alert.
in the auction, we can look at it and understand why. But it doesn't fit my trade plan, right? I can't execute in the range for the risk. See, does that make sense? Michael, did you have a setup for that? Anthony, I don't use any kind of the classical bar charting stuff. I mean, other than consolidations, I guess.
Follow your stop.
But other than that,
Follow
I'm
your
not
stop.
looking at those kinds of structures. My primary chassis is this, the volume and the price. So I don't let those things come into my thinking because it's an extraneous input to me. But in the past, yeah, I grew up on charts, bar charts. We didn't have candles in the Stone Age. This is mean reversion. And what mean reversion is very tricky because you're trying to find, remember how I talk about mean reversion? It's my least favorite structure because this is what happens. You get something like this, comes in. Or you're trying to pick which one of these. Is it this one? Is it this one? Is it going to be this one? Or none of them, you see. So that is where, and you saw yesterday, I think yesterday I was trying to get short. I took a couple point stops before I got in, because it was around that high, which was that 15. And I think, and I don't have a problem taking a 2-point stop. I mean, I don't even think about it. In fact, I'm at this point, it's not material, because the range of the trade is what justifies the risk, you see, for me. That's why something like this, I can't do anything with that. Now, as we get further outside, I can look at it. Now, this is important. This
NQ,
outside edge of this
impulse.
and this volume.
NQ,
So we're going to be
impulse.
looking here
Check
to
contacts.
observe it.
Check contacts.
Let me try to, I got to look to the left, right? You always got to look left. What's up here? Here. Stops are going to be above this swing. I have to stay conscious of that. And I have to be real conscious of that.
Absorption ES buyers at 3,913.25.
Caution. Large
So this
quantity.
trade
Caution.
is very
Large
dangerous
challenge.
because retail trader behavior has their stops up here. Now, if we bump through the stops and exhaust in this area, then there's a potential opportunity
S&P sell
to mean
ICE
revert,
500
right?
too.
So part of having a trade plan, whether it's the right plan or not, and every outcome is random, is to know before it gets there what you might do if you see it. So I have nothing to do here, right? Why? Stops. Where's my location? Here and above here. And that's where we are. So let's observe. And these are not trade recommendations. So let's just see what happens.
The HVN.
So now I'd be looking for exhaustion. This is not a recommendation, guys. This is nothing. And we have retail behavior up at VWAP. So this is an area.
ES, pending V on alert. ES,
Trade
pending V
and
on alert.
context.
So let's observe it. VHVN, stop pick, exhaustion. We have a couple of pieces. Let's see what it does.
S&P buy ICE 500 too. S&P sell ICE 506. Absorption ES buyers at 3,912.5. S&P buy ICE 500.
Is everybody with me? So now we're going to be looking towards the liquidity, or I should say, well, we want to see what happens with this guy. If he pulls, he might open the door in this volume right here. So and it's aligned with our VHVN, which is aligned with this volume, etc. Risk is still stops are sitting up here. You got to be conscious. So the job is short, not a recommendation. This is the area we're looking for, and then rotation. Maybe. And these are not trade recommendations. I want you to see auction market theory. Does everybody kind of see the behavior? What is the market speaks, right? Maybe? I mean, it's about, so for me, I am trading behavior, and I'm looking for alignment in whatever time frame, you know, whether it's the highest time frame or the intraday time frame, and this is a short. Is it not enough meat on the bone? You don't trade it. But you're going to be in here around 13 down to 9. Cover your risk, and you have a point to go to White Castle. Now, which is a hamburger joint if you guys who aren't in the States. Now, where to? Again, look what this is. This is mean reversion. Remember context? Mean reversion.
ES, pending VPOC alert.
Outside,
ES, pending VPOC
in.
alert. ES, long 2P, long 2P.
Not a trade recommendation. I just, you know what, if you guys can kind of pick up the idea of how the market operates, you're going to be way ahead. Now you got to vet a trade plan. So for me, location first, which is based on structure and context.
S&P sell ICE
pending
533.
VPOC alert. ES, pending VPOC alert.
Right? And then this is your trigger. This. Short, stop, scale, helmet. And then it either goes on to here or it'll come back at you.
VPOC alert.
And that's it. One trade of thousands.
S&P
This is not
ICE
complicated.
548.
ES, pending VPOC alert. ES, pending VPOC.
Futuristic signature VWAP to VPOC is a potential opportunity, and I anticipate we may get back there, but I also have other locations. That's what these are. See? So I don't know how far it'll go. I mean, the trade came to a location. I saw the trigger. My job is to take the trade. I don't know after that. And then if I got stopped out, I'd be on the next trade, which would be up here. And I just accept that. Because I'm, you know, other than how I feel emotionally about being stopped out and the things I utter in private about it, I go on to the next trade. Because what a trade is, to me, is a probe of a potential location, underlying potential. And I have no idea is it going to just do this and then push out, right? It's possible. It's no different than anything else. It's just maybe. The best you got is maybe. So outside in, mean reversion, back here. Ahead of it, by the way. That's the trade. It doesn't have to do it. It doesn't have to do anything.
ES, pending VPOC alert.
So then it's about having a trade management process for this. You know, it's up to you. The other part of this is you could just be all out right here and not think about this. That's up to you.
Mark trade zones.
I mean, mean reversion, the primary target is this. You see, because that's the reversion, is back to the high volume. So outside, in. So that's why this is the primary, and that's why it would be your scale or your exit, subject, you know, to whatever you're doing. You know? So if we get above here, then the next area to observe is going to be this. See? That's it. So let's see what happens. Back to the volume. And that volume is sitting right there. Right there. Where the white line is. If we get above here, then there. And it's quite possible.
NQ, long midpoint reversal. Long midpoint reversal.
VHVN.
So let's observe. Remember now, retail stops are sitting above VWAP.
VHVN.
JF, it's the stop iceberg detector. Go to the marketplace, you can download it. You know, I think the whole thing, I think the whole shebang Global Plus with the MBO and all that, and I mean, and I'm not sure, rhythmic data you can typically get through your broker. I think the whole thing's under $300 a month. Now, when I hear $300 a month, you know, there's that little twinge. But the other side of that, what's $300 a month? It's, can you make 6 points a month using the tool? You know, a month.
VHVN.
You know, that's like, what, 1.5 points a week. I'm okay with that. Do I have an advantage with this tool versus just, you know, not having the tool? I won't trade without it, but that's a personal thing, you know. I never was able to trade off a dome because when I started trading, we didn't have domes. And so I always kind of went in a different, and then, you know, trying to remember what's going on here in the order book, I don't have a memory for that because back to VWAP, nothing to do here, by the way.
VHVN.
Because I have a rule, again, just me, stop pick.
VHVN.
So I want to see these guys get taken out. This is retail trader behavior. Automatic selling at the VWAP stops above it. So I'm going to wait. Not a trade recommendation. We have VHVN. We have VWAP. Let's see what happens. Now the thing can come down. This is, by the way, this is the target.
VHVN.
Oh, we did pop it. Whoops, excuse me. So this is a potential. This is a short. Sorry. Not a trade recommendation, okay? It covered up the, yeah, right here. Chop, 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 break, pull back, short, not a recommendation, target. Let's see if it does it. Not a trade recommendation. This is in the PDFs you can download if, you know, if you're interested in them. So what's the deal with this? Potential short, scale, target, target, or potential short, scale, target, done. Up, you know. And again, these aren't recommendations because we don't know.
VHVN.
Alignment, VHVN, VWAP, retail trader behavior, exhaustion. See what I'm kind of trying to put pieces together.
VHVN.
Break low, pull back to volume, potential short, not a recommendation, right? Trades are random. You got these guys playing in here. So they may push it up through here. And that's just one trade. So we'll see what it does.
VHVN.
And nobody should be, this is not trade calling. This is education. There is nothing that works all the time. And I think you've been trading, you kind of know that.
VHVN.
See these guys here? Now, let's watch this.
VHVN.
Still is on the radar. Let's observe. So we pick these guys off. Look at this. Now let's see. Not a rec. Let's see. Boy, you got the algos in here. Another short, not a recommendation. Same trade. Mean reversion, is rough because you're trying to get an outside edge of it. That is the hard part, for me with them. So if things don't materially change, I will take it again. And I'm not saying anybody should do this. Because if I get spanked a couple times, then I'll just back away from it, But I'm good for 2 shots at it, maybe,
NQ, pending VPOC alert.
See?
NQ.
It's just the way it is. That's
VPOC
trading.
alert.
There's random distribution. So, for me, and I'm going to assume I was taken out, all right? Because I'm not trading live at the moment, obviously. So, outside, short, back on the same trade. This is my obstacle right here because there's going to be stops here and here. So we got to scale. This is something you got to be aware of right here.
VHVN.
Because this is a micro buying structure.
504.
Sorry. So I need to get under here to get down to here. And if not, then that's life in the fast lane.
VHVN. VHVN. VHVN.
Okay, let's watch the liquidity right above the VWAP here. And I see them pushing below. You see them? So there's a good chance they're going to push them.
VHVN. VHVN.
One of the things you guys, another thing you need to do about this is you need to have
VHVN.
a way to manage your trade. So we can see the structure and the potential, but there are issues with all trades. You have to have the management for it.
Check context. Check context.
So this hasn't failed, but it's getting ripe. So we got to watch this structure right in here.
VHVN.
This is where discipline comes in, guys and girls.
VHVN.
Because the trade doesn't fail until it gets above here. And I normally give them about 2 ticks, This is still our target. But, got to clear this thing down here. And this is a broad consolidation. Let's look at it. See? Chop, 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 chop. And it's going to release on one of these sides, of course. And the theory is outside in back to this. If we don't, then this is too low, and then we're going to release the other side. And that's all there is to it. But this is our outside edges up here. So that's why this is mean reversion. And we don't know. Because if we leave this behind, then there's going to be a lot of short covering.
Mark trade zones. Mark trade zones.
So that's it. That's all there is to it. There's nothing more to overthink, in my opinion.
VHVN.
Here's something else you should be thinking about. There is trade software where you can export your data and look at the time of day, day of the week, where your statistics drop out. For a lot of traders, it's lunch time because of chop, you know, like this. And their statistics are skewed, you know, where it's not so good. Other traders will find on a Friday it's not good.
Yes,
HVN.
long 2P. Long
By the way,
2P.
algos are really messing around in this. You can see them, you know. So those statistics are important because you might find,
HVN.
or trading the open, you know, you may find that your probability is very low for certain times of day or days a week and things of this nature.
NQ,
So, and if
long
that's the
impulse.
case,
NQ,
then you
long
shouldn't
impulse.
trade.
Check context. Check context.
So, you know, that's another part of this thing. So we have this potential now to squeeze again. Mean reversion outside, hard. But it appears that we're making, in other words, this consolidation that we're going to come out.
Long impulse. ES, long impulse. Check context.
So for me, there's nothing left to do with this now. Consolidation, breakout to the upside. Now we want to watch this area up here. Let me show you why.
No bailing. Honor your stop. Honor your stop.
But with mean reversion, you know, I'll take a few shots at it. After that, it doesn't, I just sort of sit back. Because what you're trying to do is get outside edges. And you can see what happens with that. Because you'll keep getting these triggering rotations. One of them may come back, or it may just not. It may just give you, see, the thing with mean reversion is counter rotations, and then they don't go on. And one of them will, potentially, and you never know which one. So it can be a hard trade, really, which I think I've discussed quite often, you know. One of the things I've noticed with myself is I give myself a 3-strike rule on a setup, by the way. I'm not saying you guys should do that. Mean reversion is hard. I mean, yesterday, I think I took 3 of these. 2 of them didn't work out, and the final one was the one that, you know, was near the high of the day. It's just because you're trying to get this outside edge, so that's pretty high. It's great when it works out, because here, if this is like your location, this is your target, you see. So even though I'm getting outside, this is still the target. So the job then is scaling, you see. So chop, 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 break low. Now we have to see, right? And if it doesn't, you know, doesn't happen, it doesn't happen. This is still the target. So I have this 3-strike rule. You maybe only want to try it once. It doesn't matter, because there's always another trade.
Long
But
2P.
this, you know, doesn't look necessarily like it's worth trying, you know, because we're making higher highs, higher lows, and we came out of the consolidation below. So the shorts now, potentially, this is the squeeze potentially, and I don't know. I've got a level up here that I marked called the low volume node, and it's up here. And then you got the mid. So this is what this is. Let me show you what this is. This is the auction below, all this. We're now, this is where the low volume is, right here. So the market can rip through here because it's poorly auctioned. Then we had a distribution up above that we fell out of. This is like no man's
Long
land.
impulse. NQ, long
And
impulse.
because we don't know how high it might come up in
Check
here.
context.
This is an important area, and of course the mid. So this is an area to potentially observe.
Is the storage changing any landmarks?
So we'll see what it does.
S&P by stop 272.
LVN.
Okay, let's watch behavior.
ES, short 3x3, short 3x3,
LVN, LVN,
Now remember retail trader behavior. They're going to sell the mid and their stops above the
ES,
mid.
long 3x3.
We're up in a low volume area, so this can pop. It's poorly auctioned, so we have to put those pieces together and then observe potential behavior. If this trade works in this area, then
LVN.
this is what you're going to look for.
LVN,
Where's the mid? Yeah.
ES, short 2p, short 2p,
I don't step in front, and if I don't get it, I'm good. Because this could be a short right in here. But retail traders will step in front of the mid. Now, they get paid for it, that's great, you know. I like to see them in here, see them get taken out, and then look for this. If it doesn't happen, this is the target, and that's fine. It's not my trade. Just me. Because this is weak. But the VWAP would be the next area. So that's the target on this. Now, I didn't have a trigger, so I have nothing to do. But structurally, the trade is mid to VWAP and potentially to VPOC. So that has a nice range on it. That's a trade, guy. That's a setup. And for me, I have a rule. And my rule is, well, let's say what I discuss here in the lab is a stop pick. And a stop pick means you get that initial move, it pops above it, and then it's just like the consolidation move where you have the chop, you have the move down, you might have the false break up, but this is going with, you know, the bus is or the train is out of the station. This is a trade, guys. So this is what I was looking for in the short. Here. Here to here to there. It'll be interesting to see if it does it, right? But that's a trade. So, no cigar. It's not that you couldn't do it. I'm just sharing, if you have rules, then you got to kind of let the trade do, you know, go. Because one trade is not your career. Thousands of trades is your career, and your whatever your trade plan is, if you don't have a way to enter and manage this trade, then there's nothing to do. But this is intraday trading, right? So this is the short without the trigger, so no short. This is the target ahead of this, and then this. So this is something you ought to think about. At least this is a setup, but did not have the appropriate trigger. Is everybody with me? If that is your thing. No IBF, Ned. What's the trend? I mean, it's up to you. It's not my plan. Yes, torque, the stops are above the mid, but the trade is back to VWAP. So you see, it's a structured trade. This is one of those that is in the trader lab, right? Those of you who are asking about the IBF, you're talking about getting long.
trade zones, higher time trade zones, higher time trade zones.
For me, Ned, there's two uses for that setup, the IBF. One is the mean reversion, but that's balance. We are out of balance. We are in a downtrend. You know, I mean, we've shifted context inside of a downtrend And all we did was come to this outside edge, right? Low volume area. That's what this means. Low volume node, location. So we had everything going for us here except, one little piece. But this is the target. This is the target. And even if you don't get it, the trigger per your plan, unless you have a plan that allows you to trigger, which creates more risk in my opinion, then you don't take the trade. But you learn from it because this is auction market behavior. Here, here, and then punt. But this is the primary trade. This is nice. I'm good with this. That's a 10-point trade. And if you get the next one, 9.5 from here, that's about an 18-point. 10, 18, you see, or done here, right?
ES, short impulse. ES, short impulse. ES, context. Pending VPOC alert. Context. ES, pending VPOC alert.
Anybody have a question? Ned, did I clarify the IBF for you? I probably went off topic. There's two uses for the IBF. Counter trend trade, when in balance, out of balance, a continuation trade. So the IBF gives you two things. It gives you a continuation setup potential, and that's back to mid, VWAP, the VPOC, those kinds, and that's why I was working that. So, but no long. So short only. Does that make sense? Mr. Sharkey, I pull in all the volume that has traded for the higher time frame profile, all the volume in the area. Currently, my long-term profile is going back to January 2020. And if we go lower, which is probable, I'll be pulling in more. So if we take out the low from January 2020, will move it out a few months. I'll just keep adding it. The other profiles, the intraday profiles, the daily profiles, I put those together when there's consolidations. We broke out of a consolidation. We're trading inside another consolidation, which is why this is the target. If we break out from this trend, then we have more, to go. But this right now, I'm trading in this structure, and this is the trade is from here to VWAP to VPOC. Hope that makes sense. I mean, it's a beautiful trade, and it fits everything. So, but subject to your trade plan, do you need the pick? Then you need it, and it's not your trade. If you don't need the pick, then, you can, that's your thing, But this has chop, 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 break high, break low. If you can read it, then it's up to you. But it could have given you another one of these and then broke, or not, But this is our target. So, but this is primary, and then this is tertiary, and there's more. But see, for me, and when I talk about me, I'm talking about retail traders. I'm talking about, let's say you're new and you're two lot, and you can do this with micros, right? First one's to get risk neutral. Next one's to your targets. And if this is your target, so this, because of retail trader behavior, they put their stops under here. That's why. Then it's, how do you manage your trade? So that's the next element.
Check 12 to 1 stat. Check 12 to 1 stat. VHVN.
Is everybody tracking? Is this useful?
Pending VPOC alert. ES, pending VPOC alert.
1 hour footprint. Oh.
ES, pending VPOC alert. ES, pending VPOC alert.
Futuristic, I don't try to, I can only align with the context. You know, at some point, if they squeeze, it's a Friday, you know, and we can potentially see short covering in here, right? Long weekend, retail behavior, you know, but I don't have long on my menu today. In other words, if this thing goes up, well, put it this way, if things change where I can recognize and I have setups and manageable, you know, risk, I can do anything. I mean, if it fits my plan. Today, it's this to this, and I can be done. If you're a two-lotter, you could reach for here
ES,
to here
impulse.
and be done.
ES,
This is your primary target.
check context.
It's mean reversion.
Context.
The other side of this is back here. But I think I'd be okay going on this one from up here down to here. You know, out here, here. And by here, it's a little bit before. You know. So I'm good with that. But that's just me. For some of you, that might not be enough meat on the bone. But that's kind of how I think, and I'm thinking like a retail trader who is starting out, doesn't want to bet the ranch, and wants to build a potential career in trading. At least that's what I'm doing here. Because I think if you're not already profitable, there's no point. You don't need, you just need to learn market mechanics, and then you can build whatever you want around it. You know, you can trade if it's your thing, and this is not a recommendation because you got to know, you have to be able to operate in this to this before you try to dance in here to here. Once you understand what's going on, in other words, if I know and the word potential to go from here to here, and I have, let's say, get short here, can I add? Right? There's more to it, right? Can I add here? Because I have a target here, see? So can I? Well, if it's part of my trade plan, I can. But if I'm a newer trader, I have no business trading over here because my risk profile is different. If I'm a newer trader, I wait. See, the discipline in trading comes from waiting and not being impulsed in by FOMO and all those emotional states. And that's very important because in this business, it's not an emotional response, it's a strategic response, at least in my opinion. You know, so strategy. And if a trade doesn't work, what's the market telling you? Well, we're going to go further out. Where's the next level? It's up in here, this outside edge. We're still in mean reversion because we're trading this big area back to here. Here. Does everybody see a process at work? As imperfect as it is? Yeah, Tom, there's just a setting. Open it up.
NQ, VPOC shifted. NQ, VPOC
So this is the primary target, mean reversion.
Pending
Then
VPOC
anything
alert.
after this is
ES,
bonus.
pending VPOC alert. ES, pending VPOC alert. ES, pending VPOC alert. ES, pending VPOC alert.
I hope everybody sees the idea of context. And why that's important.
ES,
To understand the condition of the
ES,
market.
VPOC shifted.
It's not a mechanical process. It is a see, first of all, you got to understand the context. Then you can overlay setups on the
Pending
context.
VPOC alert. ES, pending VPOC alert. ES, pending VPOC alert. ES, pending VPOC alert.
So there's your mean reversion. If we come back below it, we can still check on the other side or not. So this is still, we still have this over here. And if we get below here, we can really expand. And it might happen. I have no idea. And I don't concern myself. I concern myself what I consider the primary trade, which is back. It's the mean reversion, so it's back here. So stops under here, fuel, target, target, then punt. So I can be done with this because I'm trading in this time frame. And as far as someone trading in a short time frame, you need a structure to initiate so you can see your risk. And everything takes practice. So I practice. I go back, and I think I've told you guys, I do replays. And what I do is I narrate. I do if this, then that. If not, then what? So if this,
Pending VPOC
then
alert.
that,
ES,
boom.
pending
If
VPOC
not,
alert.
boom, then what? Then potentially up here. Well, if not, this is the area, LVN. It's marked way in advance because it separates these distributions. When you get into the low volume area, it can squeeze, and we had alignment. This is about as good as I can do because this is what I'm looking for, and it's an area of behavior. And I cannot tell which one is the right one, and that's what happens in mean reversion. Which one of these? Well, while we're in here, we're still okay. Once we break out of this, then it's this. Now, what's this? 531 stops, and what do we see up here? Let's open this up. Well, come back here. I'm losing it here. This is what happens when I'm on 3 cups of coffee.
Mark liquidity. Mark liquidity. ES, pending VPOC alert. ES,
Notice where we
pending
went
VPOC alert.
to the volume point of control. Primary target. Can you understand why that's my primary? And anything after that is kind of the bonus round.
ES, pending VPOC alert.
See, for me, I'm really good. Now, here's another thought, and the term is thought. Let's say you're a multiple contract trader, or not even. Let's say you're a 2-lotter, and you do statistics, because you must, in my opinion, do statistics. If your probability on mean reversion is high to get back to VPOC, would you, instead of trading 1 and 1, trade 2 and 2 because you have a high probability, or trade 2 and 2 and 1 for the IB low, or just 2 and 2 or 3 and 3 because you have a statistic that gives you a high probability of getting to that VPOC?
ES,
How about that
pending
for
VPOC
something to
alert.
think about? Instead of going for the Hail Mary pass, you go for what might be statistically probable, higher probable, which is mean reversion is back to balance, you see, which is back to that 09. Is everybody tracking the thought process?
VPOC shifted.
That's why you need
ES,
statistics,
VPOC shifted.
because it is not important, at least to me, to get to the IB low, even though that's part of the trade. What's important to me is to get down to that VPOC at 9. So you never, really, what's going on here, have to go for that further target. See? And I'm asking the question because that's something to think about. It's not about hitting the grand slam. You don't have to, in my opinion. You just need to get alignment
DHVN.
and have probabilities, because we never got there. Well, would I have been better off with 2 and 2 or 3 and 3? If you know you have an X% probability from here to here or to wherever, to your obstacle. I mean, this could have been sitting here, right? But we also have another setup. Does anybody remember the other setup? So we have a mid setup, continuation trade. What's the other setup that we have that happened along the way? Does anybody recommend it? Does anybody recognize it? Sorry, tired.
ES, short 2P, short 2P.
Jeff, this is the stop iceberg indicator. Yeah. The green dots are the stops. The little icebergs, the E's are executed icebergs. So it really provides great insight. And for me, it's really important to see the exhaustion, like this right here. That's exhaustion. So this would be from here to here. It's not a trade, that I recommend, but this is price check in aisle 3 and the potential to come back and check this price, right? Same behavior we've been looking at, right? And not a recommendation. My purpose here is to try to share auction behavior, and then can you build something around it that you might be able to execute. So anybody, by the way, I asked the question, does anybody see a dual setup that happened in here? Yes, VWAP to VPOC.
Caution for ideal.
So we had the mid to the VWAP, the VWAP to the VPOC. This on its own is a setup. This on its own is a setup within a setup within a setup to here. So this VWAP to VPOC is done. Mid to VWAP to VPOC is done. Now here it's potentially this to this, and it's not a recommendation because we might be all done, right? Stops, where are they? Above here. So you got to watch out. But this would be the next potential area. This is the VHVN. See? I'm sorry. This is the VHVN. I'm losing it. I'm telling you, I'm totally toast. Can't get the mouth aligned with the brain. They're both going in different directions here, so I apologize if I'm not clear. You guys that are in the YouTube, I want to give you an open invitation, special invitation, to come to the Bookmap Discord Traders Lab chat. There's a bunch of PDFs you can download that have all of these behaviors. I don't want to call them setups, which some people might define them as that, because everybody wants a setup, right? Well, there's a little more to it than that, obviously. But you can study them, 80. And they're things that I put together for Bookmap, last year actually, before we started the Trader Lab. But you can only go so far with something in print, right? But you'll have them. And now you can look at them and say, gee, I like this one, I like that one. And they're not trade recommendations. They're a template. You can build a plan off of them, I think. Come over to the Trader Lab. There's a link down below in YouTube under the description, and there's also my foundation video. If you haven't watched it, you have homework this weekend. It's an hour long, and it'll give you I think a condensed version of auction market theory, volume profile, and the mechanics. The mechanics being, it speaks. Can you read it? If you can read it, you can anticipate it. If you can anticipate it, you're ready for it. And then there's triggers to help you initiate it. How's that? That's kind of a summary of the thing. And then you can dance with it. It is, in a way, it's kind of like dancing or reading sheet music. And also in the Discord chat, you would click the pin. There's the Traders Lab. You would click the pin. It would take you to the top. The videos up there and the PDFs to download are up there. There's in Word. We have them in Word, and we have them as PDFs. So they're nice and clean. And I think it'll just save you years. Humble opinion, years. Because what I've distilled and put in there took me let's just say a long time. So my experience, and just a particular philosophy and experience using a process that is I wouldn't call it more advanced. What I would call it is the place that most traders never survive long enough to get to. And it's also like a tool like Bookmap. Most traders never get to this because everybody starts in the same place. They get a piece of software, and now they think they've got an ATM in the basement. And we all know if you've been trading for more than 20 minutes, that's not reality. Or maybe you don't know in 20 minutes, but if you've been trying it for a while, you'll figure it out real fast. And you'll be always asking, why am I not successful? What am I not doing? You're asking the wrong question, unfortunately, because you're looking in the wrong places for the answers, in my opinion. And, you know, the whole thing with trading is it is very much a personal belief system. So you really kind of need to find something you can align with mentally and believe in it. And whatever you do, it's got to fit the size of your account, and you have to learn to manage your psychology and learn about yourself. You'll never truly see yourself until you trade, because we don't face the conflicts that trading creates relative to our desire to survive and our wiring, you know. So those are things you have to
No bailing. Honor your stop. Honor your stop.
Yeah, Jeff, it's just, you know, the thing about indicators, nobody knows. I mean, you buy a software package to become a trader, you click on what the tools are, and what do they got in there? There's so many indicators, you go down a rabbit hole looking for the right one. Well, if there was the right one, there wouldn't be 80 in there. What the problem with the indicators is the randomness of the market. That is the problem. When I design systems, you're always looking backwards. Well, it's no different with an indicator. And the indicators do perform at times. That's the other fallacy. That's the problem. Okay, let's watch VWAP. Problem is VPOC's in the wrong place. But watch the behavior, okay? We'll see what it does. There's no trade here. But we do want to consider behavior. Okay? So there's nothing to do. Outside edge. Stops above VWAP. Retail trader behavior. If they pop the stops and come back under, then it would go potentially to VPOC. It's not a trade because there's no range. But the thing to do with stuff like this is narrate it mentally. So when you see it, when there's a 12-point range, it's the same. See, it's auction-based behavior, and then it's got to meet your risk-reward ratio. So does that make sense? So there's nothing to do in this except read the behavior. So let's see if we can see anything here.
Mark liquidity. Mark liquidity. ES, long impulse. ES, long impulse. Check context. Check context.
So we are in the squeezeteria. We're coming back out to these outside edge. It's still potentially mean reversion. And for me, I'm very comfortable just hanging out, being a tourist. Think about if you've been trading all day today. Did you have a good day? Now, I'm still going to watch the behavior, but what I'm seeing, remember, Friday, towards the end of the day, retail is short, they're going to cover. Now, we need to be thinking about one other consideration. And we want to be looking if we see large icebergs firing off if we go into the close. So we're still early for something called the closing swing trade. And again, this is not any trade that anybody who's here in the Trader Lab ought to take at all, period. Nobody. It is a specialty. It's just like when I trade the open, it's an isolated process for me, you know. In other words, I don't do the same thing in the open, but I actually, in some ways, I do in a micro time frame that would drive my good friend Meyer. It would really bother him. But what you want to do is observe the behavior. So where's the stops right now? Above the mid. So let's observe the mid. We have alignment in here, but we have an area to observe, and it's not a recommendation. Here's that low volume zone. We can pop the stops here. So let's observe, not a trade. Now, depending on the behavior, and you also have this above you. So we have this area of observation. And we want to, and think about this, write this down. Think like a retail trader, don't act like one. Okay? Where's their stops?
Long
Here.
impulse.
So let's
Check
watch.
Long impulse. Check context.
Because the mid might be riper, actually. And this is not a recommendation, guys. It's Friday. You know, you don't want to go home with a hole in your pocket. Nobody should be trading any of this unless you've vetted it and you have a trade plan. Okay? So let's observe. Market to market, it's complex. I mean, it's such an isolated process. It's really not worth it. You know, the smart thing to do, I think, with the open is not to trade it.
ES, short 3x3.
It is problematic because of the multiple time frame interaction. You know, so that creates, you know, a lot of volatility. So I think you really, in other words, it's great, you know, when you catch these initial moves out of the opening swing or you're trading inside. But the problem is there's, you know, it's just a different trade and it's not a pleasant experience often, you know. So, you know, it's really isolated and you really have to isolate your statistics. A lot of it also has to do for me with the statistics of what's around, you know, what's near me, what targets, because I trade into targets, right? I don't, you know, pretty much don't just trade and, you know, throw the Hail Mary pass. I trade to targets because it's based on auction behavior. So see this behavior here? See what we're doing? Watch this. Higher lows, higher, right? Little stop pick here. Higher. So there's nothing going on here, but I want to watch for this guy and the pop. But we're also coming into the clock. So we have a couple things going on here, you know, that we have to be conscious of. And in mean reversion, this is mean. I think they name mean reversion because how mean it is to trade it, is where's the outside edge. And I say this over and over. And if you're trying to trade these, I put it together with retail trader behavior. So when I'm looking at this, all these look like triggers, don't they? Well, here's what I look at there. Because retail traders, where's their stops? Here. So I can't step in front of any of these. And if this is the real one here, right? If it was, and it goes all the way to my targets, then I have to go, well, it wasn't my trade, you know? See, the thing is, if you feel this impulse to trade, that's not the business we're in. We're in the business of being stalkers, waiting, disciplined, It's like you're no different than you're in the savannah out in Africa waiting for your target to come by. You don't chase the bull elephant. You chase the one maybe that's weaker and lagging. And I'm not, I'm pro elephant, by the way. But I'm just saying isn't it the same for us, right? Because we don't want to just pick the wrong fight. We want to pick the fight that gives us some better odds, which would be after they take these guys out. To me. Because if you're stepping here, you've got then stops here and above here. So that keeps me off of this, even if we come all the way down here. And I'm going to have that emotional thing. Gee, you should have took it. Does anybody have that? Gee, I should have took it. Is this your little head and shoulders, all you classical chartists? Right? Right? Chop, chop, extreme, exhaustion, chop, consolidation. Isn't this your head and shoulders? I don't trade these things. In fact, I just noticed it, but it doesn't matter to me. This is my primary concern. So this is nothing for me. But if you think what a head and shoulders is, it is a consolidation on a higher time frame here. Because this is what we're doing, right? Look, chop, chop, chop. It would be break high, break low. What's this? Chop, 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 break high, break low, pullback. That's all a head and shoulders is. Same thing. So this becomes your resistance on a pullback that head and shoulders. This would be your target. And I do not trade any of this kind of thing because I want to trade this. But I can't do anything because of this. Right? Let's see if this thing actually works and gets to its targets. Again, it's not a structure because of the risk, you see. But if you have a pocket that's deep enough, you would be getting short here with a stop over here or over here, say. Not my trade. My trade, I want retail trader behaviors typically as part of my trade, so I get them out. So I have nothing to do. But let's see if this one gets down here. Interesting, right? Because head and shoulders is basically a consolidation with a false breakout. But this is a higher time frame, see? Meyer might like this one. But it's not my trade.
VHVN.
You don't want to be a stalker, you're a sniper. Oh, okay. Everybody see this structure? This is the generic aspect of, this is a consolidation, right?
ES, short impulse.
So
ES.
this is a viable structure, but your risk,
Check context.
here to here, and where are you going to enter? So, but it's not mine. It could be yours, because this is the target.
VHVN. Caution, lunchtime chop. Caution, lunchtime chop. VHVN.
We are
VHVN.
flies. It wasn't flies, bear in mind, it was fleas. We haven't graduated to flies yet. Bear in mind, took one of my quotes, was, we are just fleas on the butt of the elephant. Fly is good. Flea is more appropriate. Casey, no, I don't watch any of the VIX or no correlations. I do have the NQ, out of the corner of my eye, but I'm not trading the NQ. My belief, and I used to watch 32 markets. I mean, what are the bonds doing? What is the, what's the DX, right? We all do that. But what I kind of came to after a while is I don't need, if the market's going down, I know the VIX is going up. If we're rallying, I know the VIX is going down, so I don't need to look at the VIX. It's all reflected in the price, right? See the retracement to the target? Bang. So, where are we aligned? Here. So, head and shoulder, bang. This is a trade that you could do. It's not, and see the structure? This is like classical, right? But it's the range. I'm more of a micro structure, so. But this is viable short. But it's just not my thing. But you might want to take a shot of this. I don't think you're going to see a lot of these, in the scheme of things. You're going to see more micro structures, nothing is, there's no limitation to what you can create. But you need to understand behavior, and then it's the alignment of whatever triggering structures you choose and the location per your plan. I mean, I hope that is somewhat something that, you can kind of think about. But I don't know if Techie Girl's in here. Techie Girl, thanks for the post you did. And for all of you that are interacting and posting in the Discord Trader Lab, thanks for doing that. I know that can be stressful trading, and Yeah, you're welcome, Techie Girl. Thanks for being here. Appreciate your contributions and your participation. In fact, all of you in the Trader Lab, there's not a right way to do it. I have only, for me, this is kind of what I relate to mentally and experientially. It's only one way. But the reason I share it is I haven't seen anything in my experience that gives me the insight that this process does, where I can really stay engaged and understand it. The rotations are random. The behavior is not. Does it go to something, or does it hit a stop before it gets to a target? I have no idea. That's part of trading. But I do know the potential behavior. I do know that if we have a short up in here that we can go here. And I do know there's stops sitting up here. So this is what I know. Then it's up to my trade plan. Do I take this up at this level, which is marked on my chart? No coincidence. See? Why? Outside edge. Why? It's still mean reversion. See? That's what this is. So think about outside in. So we're in a downtrend, and what's happening is we're counter rotating and returning to the mean reversion. This is when I talk about context. You see? What's the context? Short. How do I get short? I need a counter rotation. Can I try to see the outside edge? That's my risk. Where is it? Pick one. I'm wrong? I pay. I'm right? I get paid. What happens over the sample size? Am I green or red at the end of the day? That's the question. What are my statistics? Answers the question. And then it's the random distribution of outcomes. That's trading, guys and ladies. It's nothing more than that. And if you make it more complicated, you're wasting your time, because that's not the crux of the issue. So we're back here. Stops are above here. So now watch the behavior right here. Watch this guy. He pulls, opens the door. Watch. See? Watch. This is how you read the order book. Now, what am I going to do with this? I know what these are algos. If I break below here, I have the potential to rotate. But the trade, for me, has already done its thing. So we can come back, or let's give you the or. These guys, right? If this, then that. If not, then what? Back here, potential short, potential micro trigger. back, right? See it? Chop, 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 break high, break low. This is a potential short, not a recommendation. Why? Stops, stops. And if the trade works, where are we coming? Back here, mean reversion. So if you were on this thing, you got to scale. And by the way, where would you have to scale? Right in here. Because if stops would be under here. See? So now watch. If we don't get back and mean revert, then once we're under here, if there's no continuation, we can reverse. Watch. Is this worth the time and trouble? I don't know. What's your trade plan? What's your time frame? See? If this, then that. If not, then what? If we get below where the line is at 39.21 and can move down, we get the VPOC. If not, what? Squeeze. Right? Make sense?
ES, long 3x3, long 3x3.
Are you guys with me? So let's go back to the drawing board. If you took this short, you have to scale ahead of this. Stops are now here,
No bend.
here,
Honor your stop.
and where else?
Honor your stop.
Here. So if you're going to dance with it, you got to get a scale here. We have to hold this volume in here, and it's this or squeezeteria. And that's as much as you can consider, in my opinion, because it's if this, then that, if not, then what? And then you got your stops here. So you got to not forget that. We may never get back here, or here's what we can do. Obviously, we could do anything. This, new lows, or never get back here. My bet would be down, but you got to get below this. So chop, 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 break low, pull back, short or short, subject to your thing, target. So wait, scale, target, helmet. Is everybody tracking? Not a recommendation. Floyd's no longs. Let somebody else buy them. There's Monday, you know. We'll regroup. We'll see what the ETH does. There's a good chance we're going to have selling Monday in ETH unless they sell and then start covering. Here's the other thing to think about for Monday. If we continue lower, then we're going to have responsive buying. I already be looking for buying, or at least a squeeze. The market squeezes the weak side always. That's why we could see short covering here, you know. And you got to go back and think, if this, then that, if not, then what? Where's the stops? Above this last swing at a quarter and above the mid. Don't forget that. You can dance with it in between, but just realize you can get your toes stepped on. Back to the high volume, micro high volume, right here. See it? Structure. Structure, structure, micro. Structure. Structure, microstructure. Get below here, go there. Can't get below here, come back here. This is now our little sandbox. Everybody see it. Trend is down. No longs for me. Now, those of you who can pick the bottom, send me a DM, we'll talk. In the meantime, for me, short only. So, short. So, look at this. short, short,
VHVN, VHVN.
short.
Short midpoint reversal. Short midpoint reversal.
Where to? Here. Long ball. Where to? Hail Mary pass. Where? Maybe here. Maybe the low of the day. This part, clueless. And again, for me, doesn't matter. Because this is the primary objective, mean reversion.
VHVN.
Is everybody tracking? See, the idea of this behavior is to come back in. Now, does it get back here? Does it get below? There's no idea, you know. But it's a specific trade that is based on the context. So the context is down. We're in balance. We're rotational. So that's what mean reversion is, outside in. Now, if we're in a range, inside of a range, you could be long, you could be short, you could be long, you could be short. We're in a downtrend, so only short. Does that make sense?
VHVN.
If it goes above mid, I'm done.
ES, short impulse. ES, short impulse. Check context. Check context.
Is everybody following? See, I'm not going to try to get long today because there's no what. See, here's another way to think about this. Which army is advancing at the moment? And the counter rotations are counter attacks. Do I want to be the guys they send, you know, on the suicide mission to give the retreating army time to withdraw? Or do I want to be with the advancing army that is repelling the counterattacks? I don't want to join the guys that are in retreat. I want to be with the guys that are advancing. Does that make sense?
ES, short 3 by 3.
VHVN.
Short 3 by 3.
Pro, I won't know. Well, I should say, when is mean reversion over is when we leave this whole area behind and get through the mid, other than a stop pick, and start trading out of this distribution. We've been sitting in here all day, and that's why it's only been mean reversion. Once, if you miss the drive down, that, you know, then this is a different context. What I'm doing is overlaying the developing context, this thing, you know, how it's playing intraday, on top of the higher time frame context, which is down. So for me, and it's just my plan, I can only sell it unless it changes. So it hasn't changed. The only thing that gets a little nasty is how far out do we come on the, you know, and trying to get in mean reversion. That's the challenge with it, is, you know, where's the outside edge, right?
VHVN.
So for me, I try to find these locations. And let's look at this. This was a short, if that's your thing. This is the retracement to the volume. Short, that's your thing. Here, short, if that's your thing. You see? And again, this is dancing inside of the rotation. So if I have this as a short, and there's my trigger, here's my pullback, I'm still trading from here to here. I can, again, this is subject to your skill level. I can, or if I didn't take this, I can take this one, right? Because this is it. It's still mean reversion. If I didn't get this one, I can take this one. I can take this one. I can take that one. Again, if it's not your skill, you don't do it. And if you start like this and think you can do it, you're not going to stay in the business. Your job is to try to find outside edges and take one trade back to here and create a statistic for it. If you could do this with an edge, then you can start researching trading inside it, like here. Because all I would do is I'd add or make, you know, whatever. I'm not saying, I'm just giving you a sense of what you can do. But you have to understand this to this. And then if you want to break it into shorter time frames inside of time frames, again, fractal, that's an option. And that could be a lot of fun. And opportunity and risk. I'm not recommending anybody do that because I don't do that. But if you can, once you understand what's going on and you can read it, it's just like reading a map, you know? And it's a map that doesn't necessarily go where you want it to go, you know? That's that randomness. It's like saying, look, I'm in Chicago, let's drive to New York, but we don't need a map. We're just going to take whatever road comes along. Well, you know, that's maybe if you head east, you'll get to New York eventually. But how you get there and what roads you're on are random. Trading is random, you know? So if I trade this structure, I'm still going for this. See? Because this is a triggering structure. This is a triggering structure. I hope I'm making my point. Retracement here to this volume is a triggering structure. What I hope to share with you guys is that I'm doing a process in multiple fractal time frames, keeping in mind the higher time frame, which in this case is the developing daily time frame to trade inside of. So I'm only doing, and I'm using the same behavior, really. So I think you guys can learn this. You know? And if you're in YouTube and you want more, click the link below where it says more. Come over to the Bookmap Discord Traders Lab. We have a great community in there. They get frisky sometimes, but they're a great bunch. And there's a lot of interaction. Of course, a lot of questions, but they might be your questions. And you're all welcome. At the top of that chat, there pinned is about 80 PDFs of all this behavior that are very detailed and annotated, which can kind of get you going. Also, there's a foundation video. If you watch it, it's like a mini course in auction market theory, context, and volume profile. So you don't have to go out and get brain damage watching a bazillion YouTube videos that may take you all over the place and may not even be, you know, usable. Because we've all I mean, you guys, that's not my thing, but you guys have probably done some of that, right? What I do is somewhat uncharacteristic, I think, based on how I initially learned auction in volume profile when it was market profile. So what I'm doing is different. I'm not saying it's the right way. I'm just saying it's what I do. And if you watch it in action, then you have to say, hey, does this make sense? Can you relate to it? And that's really what it is. Then can you work with something, a tool, and can you make it something you can, you know, work with? And then you have to practice with it and make the mistakes we all make. And, you know, so sim is a smart play. And collect the statistics. You know, don't just play a video game. Collect the statistics. And then you'll understand, you know, if I'm in mean reversion, what are my chances of getting to this before getting my stop taken out, you know? And, or what are my chances of getting risk neutral before getting my stop taken out? That's, to me, the most important metric. If I'm risking 2 points or 3, can I get 3? What are my statistics? Then I have a free ticket to ride to my target. Because if for some reason I get my scale and then it comes and takes me out, my broker likes me, but then I'm on to my next trade and I protected my account. Now the thing about the scale is I'm talking about a minimum scale. And then you build it from there, you see. So everything I talk about, I perceive to be minimum. Then you can start doing metrics on what happens if I go 2 ticks, 3 ticks, 4 ticks, or to the first target. How about my scale is this, my target is this? Well, then your metrics are going to start increasing. This is a statistical game. By the way, pullback where? Here. Where's the stops? Here. Target has been hit. Do I want to step in the water again? For me, not so much. Everybody with me?
ES, long impulse. ES, long impulse. Check context. ES, check context. Long 3x3. Long 3x3.
Peter, I typically don't trade outside of RTH. But I do use ETH as reference, like overnight high, low, overnight VPOC, stuff like that, the statistics. What is the profile like in the ETH? Because initially, that's the latest, let's say the most current auction. So when RTH opens, I'm kind of leaning into that. And I have statistics regarding the overnight high and low, statistic, and depending on the leaning, that would be an initial target for me, subject to the context and the opening, where we open and are we in the previous day's range, out of range, there's other components, but basically I'm doing the same thing, So I do use the ETH, and then that's overlaid against the previous RTH. So I'm still in a fractal component. But I do trade reports, but they're kind of a specialty thing. I don't necessarily trade them the same way, and they're pretty fast. Like this morning, was kind of hot and heavy. But I have a specific plan for a report. And again, unless you're profitable, it's not a trade you should even be thinking about because of volatility and risk. It's after the report. Because it's really part of a trade plan is saying what trade fits my risk parameter for my account size. For me, 3 points, I'm good. And the reason for that is I want to trade more contracts. So that's just one way to slice it. There are other traders who are going to risk 5, 8 points, and their motivation is I don't want to get stopped out, which is fine for them. They don't quote like losing. For me, losing is not my primary thing. Risk management is mine. So I come at it a little more tight. So I'll take more stops, take more trades, but have more opportunity and more rotations. If you see all the rotations I've been kind of sharing with you, where do you think the P&L would be at the end of the day? So, and that doesn't include the morning RTH open. So putting that aside, just here in this rotation, you see, stops are over mid. Remember that. And we're coming into 2 o'clock Central, 3 o'clock Eastern, so that can get funky. So you guys over in YouTube, feel free to come over and hit the thumb up if you find this interesting and useful. Also, I do have a trend configuration. Now it's like 4 hours of trend trading. But and now that's a running trend, unlike this, which is a trend that is, this is kind of like the market got body slammed on the mat and it's laying here and it's just sort of thrashing around in balance. So this is one approach, mean reversion. But a running market is different. So, and that one's up on YouTube. I do not leave my stream up. But there's that one, and I'm leaving that up because I've had a lot of requests. And here's what I would suggest you guys do. Since it's on YouTube, you put it on, pedal to the metal, and you zoom through it until you see something, slow it down, look at it, maybe take a screenshot, take some notes, because you're going to see this process, same process, but you're going to see it in a different configuration. It's still going to be mean reversion. You're going to see in a running market how to use rotations to get on board. And for a lot of traders, once the train leaves the station, it's really difficult and intimidating because it's a shallow rotation. The thing is, the counter rotations in the trend are really tight, and you always think that, oh my goodness, it's only a 3-point, that kind of stuff, 3-4 point counter rotation, the market's already up 18 points. I can't, right? Well, there's ways to work with it. So that one is up there if you're inclined. I also have two other small, like 15-minute ones. One is just an isolated short trade, and the other one is trading in multiple time frames. They're like 15 minutes, you know, which you may or may not be interested. But if you haven't watched the primer video, which is an hour, then you're really missing out, and all this is going to be really foreign. Here's the mid, by the way. Look out for that. So, and so I anticipate a stop pick and a counter rotation off the mid, potentially, and then you got to see what it gives. Also, the potential for squeezeteria after retail trader behavior. These are not recommendations. Everything we do in the Trader Lab is about observing behaviors and seeing if we can decode it.
Absorption ES buyers at 3,926.25.
LVN,
Outside edge, stops, watch. Not a recommendation, we're just tourists, right? Think about your plan. And if you don't have one, think about one. Time of day, retail trader behavior, where's their stops, what do we have in here, low volume area, watch. There's no trade recommendations. We don't do that, right? So let's watch. Watch the book. I got little kids outside that play in their backyard. They have a great time. So you hear that high level
No
screeching.
bailing. Honor your stop. Honor your stop.
Watch the behavior right here. We're just going to observe. Do not do anything other than watch. Watch this guy. We want him to pull, right? And we don't want to see this guy pull. Okay, we don't. There's nothing here. He's gone.
Long impulse. ES. Long impulse. Check context. Check context.
Watch the book. See the book? See? This is how the heat map can help you. See this coming up under here? That's skewing the book.
Absorption ES buyers at 3,932.25.
Okay, we're outside of the distribution now. We are in the potential squeezeteria. So let's watch. See the stops. Thanks for playing. Watch this. High volume, right? So this is a VHVN. Now we're at the going into 2P Central Time, 3P Eastern. It's a dangerous time. And this is where we have another potential opportunity to observe called the closing swing trade. And you guys have watched my video, you know what it is. And it is strictly for observation and education. If you're not a high-powered, successful trader, it would be like throwing yourself over Niagara Falls. So don't even think about it. But you can learn from it. It's a specialty. So let's watch VHVN. Watch the behavior here.
One minute.
Watch the book. See the book? So the book is not helping us at the moment. They got a pull. There they go. Let's see. Now you want to see this guy come down. If he doesn't or he pulls, then again it's like taking the lid. See him come. This is algos. You can't trade with algos or against them because they're just bracketing, you know. So it's really pressure. It's like a hand pushing a cork down or pushing it up from the bottom.
30
So you
seconds
can't
till
do
use
anything
event.
with these. We're at a location though, so let's observe it. I do think the market is vulnerable to continued squeeze.
20
So
seconds till news event.
let's watch the behavior. Exhaustion, chop, location, not a trade recommendation.
10, 9, 8,
Stops under
Seven.
the mid.
6, 5,
This is just what you should do is learn, observe.
Event has a trade in context.
Watch. This is very vulnerable. So let's see if we can see anything. See these guys? This is the same guy here. If you see them moving together, see what they're doing? Stops are now above here. So watch pulls. What does this guy do?
VHVN. VHVN. VHVN.
So we have this potential for the what's called the closing swing trade, right? So
VHVN.
that is on the table.
Manager runner.
VHVN. VHVN.
Reaction against liquidity is important. Here you see the buyers, and they didn't make any progress. That's important insight. It's not a triggering mechanism, but it's important. Now these are the subtleties you can see using the heat map. I don't know what will happen, right? So these guys potentially were pushing into this guy. You see, now this is algo behavior. You see this wild stuff in here? That's algo behavior. It just makes no sense, right? Algos. And they get active around 2:30 Central, especially 2:30. It becomes like manic.
3,932.25.
So this is, now here's something else I do. Like this is a selling structure here, but that's a weak high. If I see it, and this is like your double top. I see this, it's weak. This is a different structure. We broke high, broke low, pull back. See the difference? So in a consolidation, now this looks like a short here, doesn't it? Break high, break low, pull back. Stop would be above here. You could put your stop above here. I do use
Short
these.
midpoint reversal. Short midpoint reversal.
We're at a location, see? So this is the thing about having alignment. Now, if it's not your trade or whatever, it doesn't matter. It's not your trade. I can work with this because of this.
Mark
Watch for
liquidity.
out of balance
Mark
closing
liquidity.
trade. Watch for out of balance closing trade.
Again, not recommendations. Remember, your trade plan is not necessarily going to be my trade plan.
LVN.
Just start with something that you like.
LVN.
You know, it's like you get, and then you start with one. It's not about trying to trade 5 things. That's not going to work. If you want to be in this business, you start layering setups and behavior. So each, if I had a camera here, I would show you what I have in research. Each one of these setups are in binders, and I don't mean the skinny ones. I mean an evolution of understanding. I can't tell you how many charts and how many ink cartridges on my laser printer have been. My wife says another one, because I'm still printing them. I'm still annotating them. And when I'm going to do trades, I mean, obviously at this point I kind of know what's going on, right? But I used to open it up, and I still open it up. I have a book, and I have all my setups. And I'll open up to my setup if I need to look at it and just go, oh yeah, okay, this. And each one is annotated, there's pictures, and then there's steps, the rules, balance, right? Market should be inside the IB. Market should make a counter trend rotation towards the top bottom of the developing value area or LVN zone. LVN zone. Targets. Mid, opposite IB, LVN trade zone. Difficult setup, better late than too early. No inside-out trading. Caution. High noise or large rotations up your time frames so you don't get in the noise. Wait for outside extremes.
Trade zones.
I mean, that's one part of it. Then a neutral day, symmetrical or extreme. That means you're rotating from outside in from both sides. That's its own behavior. Then I have charts. And many of them are in the download, the PDFs. Target. Helmet. Is everybody tracking? Mean reversion. What has changed? Stop pick at the mid. Remember? How far does it go? No idea. Location. Is everybody tracking? Can you see it?
VHVN. 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 VHVN.
Bill, you need to change your name if you're going to be here. How's everybody doing? Is this useful? Matt, the closing swing trade is a retail short squeeze that is an outlier, and part of it has to do with retail trader behavior because they typically trail stops. And if we get lit up, it feeds on itself. It has a cascading effect. And what we look for is that outsized move. And I don't know if it's going to happen. But in the meantime, I'm trading outside in. What has changed? Mean reversion. The only thing that gets funky with mean reversion is where's the outside edge. Nothing has changed other than as I cautioned, where were the retail stops? Here. So where was the next location? Well, I don't know how far it'll go, so I don't think I know anything, but here. And this has been sitting up here, hasn't it? And where did we go? Here. Right? That's as good as I can get as far as trying to have alignment with behavior, and it's all auction based. And that puts from here to here, I'm good with that because that's a 10-point trade, right? And where's my risk? Well, here to here. 3 points, right? Remember? Retail trader behavior. On a 2-lot, I'm scaled at 3 or 3. Pick what number. It's up to you. For me, minimum is risk neutral, so stop can be above here, and then target here or here. Pick one. I'm good with this. Retail trader behavior on the other side. The longs, whoever they might be, have stops under here. That's what they do. And we get automatic buyers here. That's what they do. They're going to potentially get taken out, and we're going to go here. That's what I do. And then, so I anticipate the counter rotation, by the way, because that's what retail traders do. Thanks for playing. Appreciate it. Now back to the mean. This, and potentially here. I don't know. Right? This part I'm not worried about. This is like the bonus round. I want the primary trade. And then remember what I said, that if the range is not big enough, I can't take the trade. Right? Well, this one works, right? So is it worth risking a couple of points for this? See, that works for me. That's called risk-reward ratio. So my trade has to fit certain parameters. If I'm risking 3 points, I got to make more than 3. So this is my target. This is the counter rotation from retail trader behavior by the VWAP. They're mechanical, right? and their stops are under here. If I'm in a mean reversion context, I still think I have this. And by the way, if I don't, it doesn't matter to me because I'm good with this. So let's watch. Remember, think from both sides. Think like a retail trader. Don't act like one. Now, if these guys get love and this thing comes all the way up here, good for them. They deserve to get paid. For me, it's not my trade. My trade is back to here because of the auction. And every trade is random, right? So I'm okay. So what do I do with this thing? Well, chop, chop, break low, break high. Looks like a reversal. So if we come out of here, I could be flat. Doesn't matter. Or I'm done here. It doesn't matter. Because I get to the point of accepting randomness. I'm still good with the trade. It's still a 10-point trade. Straightway, I have no idea. Matt, on it. Which video, Matt? Is that the trend one that you're referring to?
Reversal.
ES, short 2P, short 2P.
Oh, the intro one? It's the same process, Matt.
Absorption ES sellers at 3,924.5.
By the way, the global one has a lot of tools in it. Absorption, stop sweeps. There's so many more. I got to open my, let me open things up here and give you some sense. It has an indicator that will show the amount of orders, the change in the liquidity. Now I look at the heat map so I can see it, but it'll actually show me what's being added, what's being pulled. So sweeps, absorption, stops. This is an additional thing. You need rhythmic data, and it's CME. It's not everything. If you're going to trade stocks, you need DX feed. It's a different feed for stocks. But if stocks are your thing, you can use this process with stocks. Get on Tesla or Microsoft, the ones with the big, the volume, and knock yourself out in there. It all's the same. If you're an option trader, you can trade higher time frames. Like the big move we had yesterday, you could be, either selling it if you're a seller, of calls up at the target that we were shorting yesterday, or you could be a put buyer if you want to play safe. That's up to you, as long as you know where you are in the scheme of things. And options, a problem, of course, is time. But that's not my thing.
LVN.
I traded options years ago. I find, I like the idea of futures, and I like, there's more things I've done with options, but I'm not going to go there. But I'm just going to say that you can use this, crypto, stocks, everything. These tools are generic, but the thing that's important for all of you is no matter what you trade, this process is generic. So you can overlay this process. What you require is an understanding of the nature of the market, its idiosyncrasies, and you also require enough volume. That you, like NQ, this works fine on NQ, but NQ is thin. So you have to adjust your risk. You look at the order book here, we've got 100, 100. In the NQ, you might have 12. So, you run a stop in the NQ, they'll call you like in a couple of weeks to let you know where you got filled. It's a different animal. But in exchange for the risk, you get these outsized ranges, 50, 60-point swings. It's all risk reward. But if you want to learn, I believe ES is the best because of its depth. You're going to get most of the time when you hit a stop, you're going to get filled at your price, one tick off when things are wild, pretty much, subject to it naturally. So it's got better dynamics. Now the ES is rotational, but you know, these kind of instruments are rotational. But the rotation's your friend, really. If we didn't have the rotations, what would we be doing here?
Short 3 by
Mark
3.
trade zones.
Short 3 by 3.
Potential triggering structure, not a recommendation, right? It's in the middle of nowhere. Where'd we pull back? Mid. Huh. Where'd we pull back? Low volume.
PN.
Let's see. Not a trade. This is in the middle. This is like floating down the river. It'd be back here or not.
ES, long 2P. Long 2P.
This is the trade. See? This, not so much. So, how do you learn this? Well, part of it is narration. If this, and we don't come above here, then that.
ES,
If
long
not,
impulse.
then what?
ES,
What is
long
this?
impulse. Check context.
That's easy, isn't
Check
it?
context.
Yeah, Neon. I remember I was trading the ES. I don't remember what year it was, 2012 or 11, I don't know. You know, one of those years. And I used a 6-tick stop and a 6-tick scale. And if you had a 5-point or 6-point move for the day, you were partying,
Check context.
you know. But it's all proportionate. If you have a process, then if you're running a 6-tick stop, maybe you run more contracts. I mean, it's just statistical, you know. So I think the person who really liked that was my broker, because it meant I had a you know. But anyway, it's neither here nor there. What I'm saying is it's all process. So you can pick your market. If you like crude, you can go there, but there's no MBO data. You know, I like having the MBO, so that's CME. And the reason for the MBO data is because of this right here. One buy stop. That's exhaustion. Look, chop, 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 exhaustion into liquidity, break low, short. See? Now, it's not a recommendation, but I want you to see structure. So isolate these structures. Learn to recognize what is creating the behavior. Now, these are not trades, of course, you know, at the end of the day. But the point is isolate. Grab screenshots, annotate, circles, arrows. Look at this right in here. That volume becomes, that's what took place in here. If we don't get above it, then we can bounce off it. If we get above it, then these guys are toast. It's that simple. Where's the location? You see? So this is a potential opportunity to observe. Let's see what it does. Now I'm in a microstructure. These aren't trades. It's learning to recognize behavior. So when you're on sim doing your practice over the weekend, your job, if you choose, is to start learning to read the auction and structures, because this is generic. You know, now it has to be aligned with something. It isn't out in midair. But if you can do this and see it, then you have an opportunity to participate when it shows up. So this is an isolated process. This is called a trigger. Then it's alignment, but something. And it's not out in midair. You know, this isn't like jumping out of the 10-story window. You know, this is like, you know, this is process. Stops 2 ticks over the high. Not a trade, because we're at, you know, I'm just saying this is not a location, right? But you can learn to read. Where does this trade fail, right? What's the dividing line? It's the volume. This is your protection. See? So if this, then that. If we get a sell trigger and we come back to the high volume, then what? Then lower. If not, then what? See? So that's okay. If not, then potential squeeze. It's not a long for me. So I'm just giving you an idea. So practice. So your homework would be to study the higher time frame. You can get that off the PDFs, and you guys who are in YouTube, open invitation to come over to the Bookmap Discord chat, the Trader Lab, and get hold of those PDFs. I mean, it's valuable education, free. And in addition, there's other education that is free And you don't have to be a subscriber. It used to be that way. It was only if you were a subscriber. It's currently free. I mean, which I have no idea why, but it is. And and it's free trader education, and it's focused in different areas: crypto, stocks, options. Right? Then it covers it. Qs, spies, whatever your thing is. And it's all similar in the sense of, but different tools, different approaches. So, it's what can you relate to. So I suggest you guys take advantage. Look where we are. Huh. Isn't that a coincidence? Or is it? So, Meyer. Tourists. Howard, the PDFs, if you hit the pin on the top of the Trader Lab text, it'll take you to the top. And there's Word doc if you lean that way, and PDFs. I think I like PDFs, but that's just me. And there's the video up there if you haven't watched it. Top corner. Yeah, thanks, Torque. Top right corner, you'll see that pin up there. So all you guys over in YouTube, feel free. Come on over. Water's fine. It's a great community. A lot of interaction. Sharing of ideas, experiences. It's a collective. It's not about me. I'm just one of the guys, or one of the folks in there. And there's other contributors. There are traders in there with more experience than me. I know one who's there who's a 50-year trader. I'm kind of a newbie. I've been doing this 42 years. A lot of 20-year veterans, 10-year, it doesn't matter. And newbies. And it doesn't matter. The point of it is to leverage off each other's different experiences, and maybe together we can make something better that is, helps us all achieve our objectives and maybe have a long-term career in trading. And there's no one way to do it. Everybody has certain beliefs. I mean, in order to step out in front of the train, you got to believe in what you're doing. And if you don't have that belief, then you got work to do. And you do need statistics to help you with the belief. Because when things don't go right, if you don't have statistics, your inclination is going to be to change it. Right? The next indicator, the next vendor or the next magic thing, you know what I mean. That's human nature. But if you have statistics, you're going to stick to your trade plan because you've proven it to yourself and you understand the random distribution. Notice this. I just want to point this out. Everybody see it. Mean reversion. So this is what we're doing here all day. Mean reversion, mean reversion, mean reversion, outside in, outside in. How many of these trades might you have taken? And would you be walking away with more or with less on the table? Neon, you're a newbie. So no matter how long you've been doing this, don't be shy. Come on over to the Bookmap Trader Lab. And the reason I want you all to do it is so we're all in the same place, so you can interact. And there's a lot of good traders with a lot of different experience that contribute. And, I think it's the leveraging collectively that gives us, because we all come from different experiences of trading at different levels, and that's the benefit, I think, of having a trading community. So up to you guys, but you have an open invitation, and you also can take advantage of all the other education that's provided by Bookmap, even if you don't subscribe. So how we doing here? 224. Still got to watch out for a squeeze. You know, the thing with the trade is one of these times, whichever one it is, the trade will fail, and or any trade can fail, and then it's like, oh, I guess this one failed. It's the detachment from needing to be right. It's just waiting for your location, your trigger, and your helmet, and it's just one. My analogy is always the casino, because the casino works on statistics, because they're not gambling. But what they don't know is the random distribution of winners and losers. That's what they don't know. So they don't change the blackjack game because somebody walks out with 100,000 in their suitcase. They know that it's a random distribution. They also know folks are going to come with the suitcase of 100,000 and leave it there. But when they have 100,000, 50,000, 20,000 that walk out and they're going down, they don't change the game. They rely on that distribution that's going to net out more or less pretty close at the end of the year because that's their stats. They do not change their game. And then trading, once you have your stats, you have to lean on that. That's your belief. Otherwise, you're always chasing and you never get a cohesive trade plan. That requires you do the statistics, and that's not the fun part, if you will, of trading. The fun part of trading is having confidence to execute in spite of the outcome, because sometimes the market's not, you and the market are out of alignment, and it's just the nature of it. Other times it's like it's perfecto, and you go, gee, I'm so good, and your ego gets stroked and you have an outsized day. Well, the reality of trading is that outsized day is part of the random distribution, and there'll be other days where you have 8 losers and 2 winners, and then there's the next day you have 8 winners and 2 losers, and you're going to ask yourself, what's different? Well, alignment and randomness of rotations, noise, thinness, there's all these variables. And the thing about that is you need those statistics to get past the days where you leave dollars on the table. So anyway, just a thought. Watch the that Squeezeteria now. Hope that's useful. Well, Slott's the IB high, I think, has a ways. 39.58 quarter. That might be a bit of a reach. Anything is possible. I don't have any opinion. I do have what's called the closing swing trade, right? And we talked about that. Now, I never know.
Long 3
And it's based on retail trader behavior in the Squeezeteria. That's what we're in right now. And it feeds on retail trader buy stops, trailing stops. So it can create a cascading effect. You're seeing it right now. So let's watch. Again, there's no trade recommendation. These are behaviors to study. Now, the thing about this is the market's job is to trade, to find too high and too low. The fuel of the market is usually who's off sides, right? Well, if the market gets oversold, and we did hit our target, if anybody remembers, I know it's a long time ago, right? That was our target for the day, unless we broke below it. So, right? Can't forget these little nuances. Then we're trading mean reversion outside in, outside in, outside in, with the potential of not taking this out. However, we're in the Squeezeteria, and we can get these rotations back down. But for me, there's nothing to do. But observe. So let's observe. This is a viable rotational trade. Not for me. I'm done for the day. I am done. I was done this morning. But watch this. Now, if this is your trade plan, see, here's another thing to look at. See the buy delta. See the buy delta. See the sell delta. See the retracement? Back to where? Here. Short. Now, that's if you're just trading reversion. Now, I don't know where we're going to go. Where are the stops? Let's think this through.
Trade in context.
And it doesn't have to do that. Retail trader behavior. See? If this, then that. If not, then what? Think like write this down. Think like a retail trader. Don't act like one. I depend on them because they're very predictable. If we're in a random environment, what's not random? Retail trader behavior. It's a huge asset in my opinion. So let's see if we get that mid.
Short impulse.
What do you
Check
think?
Context. Check context.
Huh. Yeah. Does everybody see this? The target's the mid. Retail trader behavior. Now we still have the potential to the VWAP, but the trade has done its thing.
Yes. Long 2P.
Does everybody understand why? Think about it. Edison, all stops become market orders unless you put in a stop limit. I don't know anybody who uses a stop limit in futures. Because if your stop gets hit and the thing becomes a bullet train, you could be unable. And that's not a good place to be. There's no advantage. And in the ES, you get filled at your price anyway. It's not about that. A stop order is a risk management tool. You want out if the trade fails, in my opinion. I've never used the stop limit ever. Ever, ever, ever. So, that's all I can say. Slippage is not a problem for me. I want to be out. Well, trading newbies, welcome to trading.
VHVN.
See, here's the deal with this. Short, stop pick. Right here. Where's the retail traders? Mid. The other area is here. What's my primary objective? Mid. Am I all right with this? 40 to what? Well, call it 30. 10 points all day, every day, no problem. You do it with a 2-lot. This is, and again, why do I talk about a 2-lot? Risk management, getting risk neutral, and then high probability targets. So if you're risking from here 40 to, 42 and a half, 2.5 point, 3-point risk, I need a 3-point scale. Now my stop is above the structure where it fails, and now my target is retail trader behavior. 10 points. Plus the scale, it's a 12-point, $600 trade on a 2-lot. 2-lot. Can you do something with that?
LVN. 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 LVN.
I do use limits for entries. It just depends, because I can kind of look at the structure. But I can also tell you that if I'm on, and I can't tell you how many times it ticks me, I don't get filled. So I have no problem if I see that just going into the market and boom. It doesn't matter. What's the difference? In the ES, see, it's different. In the ES, there's depth. So if I enter 1 or 2 ticks different, it just is not material. I'm not trading for ticks. In other words, there's no, see, the thing about trading is there's no precision. I mean, I can tell you many years ago, it was like, I want to get in right here. I don't, and I can't tell you how many trades I missed. Either I'd miss it by a few ticks, or even the worst one is when it hits you and you're unable, and then the trade does one of these moves. You want to know mental state after that. It's not good. So again, that's your trade plan. How do you enter? But I'm not going to enter here because now my stop has to be up here. This is weak high, by the way.
Long 3x3.
Watch this right here. And the reason this is weak is retail traders are going to trail their stops here, and it's a double top. A double top, in spite of what some of you might believe, and I'm only giving you an opinion, is a weak structure. It's not because it's an exhaustion structure. It's not a rejection structure. So it's weak. My humble opinion. So let's watch what this thing does. Remember, this is the next target, right? Mid, counter rotation, back to volume, not a recommendation. Next target, these guys, and then these guys, or not. I have no idea. See, I go in the I don't know, and I forgive myself for not being clairvoyant because I let go of that idea a long time ago.
Mark liquidity.
LVN.
Hope that makes sense. See, how do we know? I don't know. So, see the algo? See how they can goose it?
Point reversal. Long midpoint reversal.
Absorption.
This is your friend, the algo.
3,932.75.
See this thing? Whoa. Do you think that might have a little something to do with this move up? See it? Ignition algo. So, and I can't do anything with these. I mean, I see this and I go, oh no. But there's nothing I can do. This is not my game. I'm a victim of this game. And that's just part of trading, you know. I mean, there used to be the guys on the floor, you got to understand. So now
No bailing.
they've been replaced with this.
Honor your stop.
VHVN.
See, algos?
VHVN.
And the algos around 2:30, typically you'll see more algo activity. 2:30 Central, I'm talking about. See the bracketing?
Absorption ES fires at 3,900.
Here's this guy again with the ignition. Very interesting. Now, I can see it in Bookmap, but and we'll talk about liquidity another time. You know how to use it.
ES. Long impulse. Check
And
market.
I'm not sure I have them. Where do I have them? I don't remember my foundation video if I was marking what I called obstacles.
Short 3x3. Short 3x3.
VHVN. VHVN. VHVN.
Pink Floyd. So we have 20 minutes to go till the cash close. The closing swing deal can happen anytime.
Short midpoint reversal. Short
And
midpoint
it often happens going into the close, but it can happen at any time.
long 1, 2, 3.
Or not at all. And I'm not so sure today that anybody's going to want to. But retail traders, you know, tend to cover. And and I think we could see that. And all I know is with the closing swing trade that it's a possibility. Nothing in trading, you know. But if we see it, it would be kind of fun. And if we don't, that's okay too.
VHVN. VHVN.
Volume, pullback,
VHVN.
watch. And I have no trades, right? I got nothing to do. I'm a tourist too. Because these guys are all vulnerable because of we're coming into the close, and who wants to go back? home over the weekend and risk a gap open or some news event, you see. So that's where you got to be real careful. Now, I can work in this. Is there any reason to? See? But you can practice. If you do, now with Bookmap, it records all the everything is recorded, stops, icebergs, all this. You can do replays, and you can slow it down to half speed, quarter speed, or speed it up, 2 times 4, up to 32 times speed. Now, I've got a little experience, so I kind of know what I'm looking at. But initially, when you get to these trigger structures, stop it. You just can grab it, back it up a little bit, and then play it real slow so you can see what's going on in the structure. This is divergence. Lifting, delta, buy stops, see, exhaustion. Break below, trigger, pull back to the volume, which is right there. See it? I'm going to show you microstructures. These are triggering structures. Short, stop above here. Then what? Helmet. Not a recommendation. I'm just showing you structures. Now, you can practice this. Then you take a screenshot, and then you point out, you draw it like I did. Oh, look at that. There's the volume. Look at the retracement. To the volume. Wow. See? This is how you learn. If this is something that resonates with you. If it doesn't, then, certainly ignore it. But that's how you learn. Whatever your process is, it doesn't matter if it's this or something else. This is a short. Do you want to be short? I don't know. See? That part is not part of this particular discussion. This is what's part of the discussion. Because if you can understand this, it's all the same. Is everybody following? Yeah, John, the closing swing trade is a squeeze, and depending on what happens, if we get it, what it is an outsized squeeze. You'll see like 1,700. You'll see just a bazillion stops coming, and then you might look for icebergs taking the other side of it. See large icebergs selling into it. That is a good hint.
Check context.
And you can get an outsized move coming back towards the trend. So that's kind of what it's built on, and it's in the downloads and also the video in the Discord trader chat room if you're interested in kind of looking at it. But that's kind of like the last thing I would recommend anybody even think about, because it's really it's like bringing the kicking team in for one play, and it's not our bread and butter trade. It's really like an outlier trade. This is our bread and butter, this stuff, this. Bread and butter, all day, this.
Absorption ES buyers at 3,922.5.
Right? Is this okay? That's a 15-point trade. How many of these have you seen today? I haven't been keeping count. Do you think there's enough to make it interesting?
Sellers at 39.21.
Oh boy, I don't look at options. I gave some torque on the closing swing trade. I just basically put some screenshots out of them so you guys can see it. VPOC is the next target on this, by the way. You see, we're trading the same trade over and over and over and over again, aren't we? So if you were trading mean reversion today, how many points might you have racked up? I think on 2 lots, and remember, I'm only talking twos, because I'm going what I perceive to be the basic configuration, with risk management being number one. And yeah, you do take full stops sometime, but it's, since we're using a microstructure and we're working in a range that makes it potentially cost effective, and again, you got to vet your own ideas. This is just an idea. You could be swinging a 2-lot, which is not much in the scheme of things, even in micros, and you could be racking up some nice days or trades over and over and over and over and over. If you're trading the minis, these are, what is this one? Let's just call it, 15's the target in here. You could just go to VWAP and forget it, you see. So here or here, these are all triggering structures. 32 to 20, that's what? Help me with the math. 20, 30, 10 points. 500 plus the scale. These are $700 trades. $700 trades. How many have we had? It would be multiple thousands of dollars today on 2 lots just trading outside in mean reversion. While I don't like mean reversion, it is a market context that's more often than a trend day configuration. Trend days are a minority percentage-wise. So this is what you need to learn, in my opinion, to operate in, this process, or any process. I mean, it's not inside out, guys. It's outside in. See? And that's the fallacy. That's where so many traders get messed up, because they're going to be buying the mid, selling the mid, And I'm okay selling the mid. And first time out, but I want the stop pick, because I want those retail traders taken out. Again, that's just me, And I also don't have to wait for that. But that, again, is me. When you start out, have a really structured process, because if you experience FOMO and you don't have rules and you can't follow them, you won't have a career in trading. So part of it's a test of you. You create a trade plan, and can you follow it? Well, if not, it's probably psychological, or you haven't done the statistical work, you see. So that's kind of what that's all about. You can build a trading career on the basis of a 2-lot, in my opinion, as long as you have range. That's it.
ES, long 2P, long 2P.
Again, it's just one guy's opinion, It doesn't matter how you do it, by the way. It's just as long as you do it, and it resonates with you. So here, this is the outside, but see, I don't care about that. I'm good with this. Why wouldn't I be? Because this is the high probability move in mean reversion. The concept of reversion is to this, the mean. It can also come out to the other side and then come back. It's an auction. So too high, back to the fair price, and now where's too low to come potentially back, or not. Right? So we can still rip down here. See? Well, Meyer, thousands of dollars don't buy you a blue Ferrari. But in one day, I think you could probably move towards that. By the way, I want to thank all of you guys for being here. I'm not done yet. I mean, you're not getting rid of me yet. if you have buddies who trade and you think they might get something out of this, while this is still happening and I'm still doing this and Bookmap is offering all these educational courses, invite them over. You know, we all, by the way, everybody goes through the same thing in trading. There's nobody unique here. It's just amount of time, you know, and we all can get better. So if someone, you know, is interested, or even if they think they understand volume profile or auction market theory, I'm willing to bet they don't do it like I do it. And it doesn't mean that anyone should do what I do. Watch the behavior.
Short 2
Thank
P.
you.
Short
Long
2
midpoint
P.
reversal.
Watch out.
VHVN. VHVN.
Pretty funky, huh?
VHVN.
By the way,
ES. Long 2
VHVN.
P.
VHVN.
not saying anything.
NQ.
I'm just hanging
Short
out with
midpoint
you guys.
reversal. Short midpoint
Pull back,
reversal.
check. If we get below here, south. If not, squeeze. If this, then that. If not, then what? If this, then that. So here, pop, pop,
VHVN.
chop, chop, break. Not back enough, nothing to do. This is an obstacle. This is an obstacle. This is an obstacle. No opinion. Me, don't need to do anything. But the Ferrari payment would be done today on 2 lots. And I recommend you don't do a Ferrari. Meyer, come to Chicago. I want to ride in your Ferrari. Meyer, where are you located?
Absorption ES sellers at 3,914.25.
Yeah, doesn't matter. It doesn't matter. It's all the same process. In fact, there's options traders that I think you would find really interesting. There are webinars, and it's specifically option oriented, and it's really a lot about market maker behavior. So it's kind of comes from a whole different approach. Uses, well, it's complicated. They're called spot gamma. I don't use spot gamma. A lot of traders do, and it really kind of shows you where the market makers have to hedge. It's a whole different animal. So if you're interested in options, and a lot of these guys trade futures using the market maker, and I don't want to go into it. It's not what I do, but you know, this is stepping out into like the ozone, and it's a more sophisticated aspect. And some guys use these where they perceive the market makers are going to need to hedge and stuff of this because they have studies and things to observe this. We're diving into the deep end of the pool, right? But in my opinion, I'm all about simple and not layering more inputs because they can potentially, you know, it's almost like a Fibonacci number, you know. You know, here's the extension. Well, okay. Do you think the market's watching the number? Not really. Or Elliott wave. You know, I've studied all those things. You know, and Elliott's based on waves, structures, fib retracements, extensions. It's all great in hindsight. But while it's developing, you don't know whether you're zigging or zagging, coming or going. Well, okay. Spent a number of years working with that. Even got into Fibonacci time projections and harmonic cycles. I could go on. Maybe some of you have. Or maybe you haven't gone down that road. I'm going to suggest you don't. Unless you're curious, you know. I've done a lot of research and jettisoned most, you know, most things. So I don't use any indicators. That might say something. Because I don't need to. And I don't want the conflict. And for me, indicators became random inputs and ultimately I was chasing a curve fit, though I didn't initially understand, you know. because you're always looking either for the next indicator or making that tweak or adjustment to get it just right. You know, whether it's your 9 EMA or your channel or your volatility envelope, your ATR, right? All this. Am I saying anything you haven't heard of or thought of or done? Probably not. None of that's here, because all it did was add complexity to something that can be simple. So let's watch out.
HVN.
A Porsche. Yeah, a Porsche is okay. Rolls Royce. Come on, guys. Lamborghinis. Meyer, you started trouble.
Mark time zones as desired time
Long
trade
midpoint
zones.
reversal.
Prior time
Mark long
trade
midpoint
zones.
reversal.
Futuristic signature. Yeah, I've used Hero. I don't currently use it, but I have explored. You know, I'm a beta tester for a lot of this stuff. So yeah, I beta tested it,
HVN.
and then I did, you know. But again, you know, I have a philosophy that I stick to, which is less is more. It just, you know, because if something's sitting on your screen, your mind is taking it in, and it just adds an element that may not be necessary. It's kind of like when you have multiple indicators. What are you really trying to do? You're trying to overcome a defect in that process, in my opinion, again. So
VHVN.
one of the ways, you know, you kind of figure it out, I think, after a while, and then you get the courage to start removing things. And it takes courage, because, you know, it's kind of like you buy an idea of something without really having an experience to support it. You're just making assumptions, which creates beliefs that are erroneous because you haven't really vetted it. And then you're trying to make it work because you're in an assumption again. I bought this software and it's got all these indicators. Well, all these indicators are in there, so you buy the software. Not that they work. And here's the other dilemma. They do work sometimes. Why are there trading systems that make money in certain conditions and then they break down and they get jettisoned, you say? I went through that, you know. So, you know, I learned from those experiences. But I didn't understand the dilemma
Honor yourself.
because I kept pushing forward. You know, it's that thing about pushing forward. There must be an answer. There must be an answer. So you're chasing something that you're always behind the eight ball. At least I was. I'm sure there's others that are very successful. And for me, I was successful. There's the bad part of it. You have success and then it breaks down because the market regimen is changing and you're optimizing and doing walk forward, but you're always working in the rear view mirror, you see. When Peter Stottlemyre came out with Market Profile, I was really intrigued by it. And, you know, and even with that, it took me a couple years to sort it out. And I initially, you know, I'm just like, what the heck? But, you know, my nature is to kind of go, that's an interesting idea. What about it? But it took me time. And there are times I was certainly quite ready to jettison the whole thing, you know. So that's the nature of trying. And part of me being here and doing the Trader Lab was to kind of share kind of what I've come to. I'm not saying there's not one way to trade. It's only the way that works for you, and that gives you the edge that you can measure. And at the end of the day, you got something to show for it. Other than that,
Absorption ES buyers at 3,907.25.
ES.
Neon, what the deviations you're asking me?
Pending VPOC alert.
Absorption ES buyers at 3,900.
I think Hero might be interesting in stocks, you know, because it's a really hedging locations and stuff for the market makers. In futures, there are guys who use it. Again, for me, it's kind of a miscellaneous input, so it doesn't belong in my process. because I'm at the other side of the boat. You know what I mean? Here, watch
NQ,
this.
Short midpoint reversal. Short midpoint reversal.
Absorption ES buyers at 3,900 2.75.
See, this is a potential short,
S&P
right?
by
IB
ICE
alert.
500
IB
18.
alert. 30 seconds till news event.
Now we got to watch this thing.
Twenty
S&P by
seconds
ICE
till news
500.
Well, I think the 401k is going to be a 201k.
10,
Absorption ES
9,
buyers at 3,898.75.
5,
Iceberg ES by 500.
3,
Trade ESM.
Watch the icebergs. See 'em?
173. Absorption ES buyers at 3,897.
See the icebergs? That's interesting. Now, it's only 1,000, but let's see what else comes in here. Because icebergs tend to get early.
Iceberg ES by 500.
Now, the thing with the icebergs is, and I'm going to make an assumption, they're covering. However, that gives us maybe a hint about what we might see after a potential lower opening on Monday. Just make a note of that somewhere. It's always interesting. And I have it's not a quote prediction, it's a behavior, but I want to see more icebergs. So if we see icebergs here and Monday we open lower, and you got to know retail is going to be selling, we could have a gap and then we can get responsive buying. And if we see it big icebergs on Monday, it can turn into a potential squeeze. Potential. So make a note. I think about these things because in trading, for me at least, I'm always thinking ahead. You know, I'm anticipating behavior. And I'm looking for what the conditions might be to create a particular behavior. And of course, it may not happen, or it may show up, 2 hours in, or not at all. You know what I'm saying? So it's just, that's interesting. Observe it. More iceberg buying would be better, but that's okay. Yeah, topical. Thanks for being here.
3,899.5. Trade ESM to CME at rhythmic sell 250.
Everybody, before you go, if you like this, was good for you, hit the thumb up. Grab the downloads from the Trader Lab in the Bookmap Discord chat room. Come over there, hang out. You won't be bothered. No spam, no solicitation, nada, Zippo. You'll have access to some great free education in other areas besides futures. There's other traders, and there's traders in this lab that have been around the business for a long time. Makes me look like a newbie. And we can all learn from each other. That's the idea of the Trader Lab. So I think I'm going to wish you all a fond adieu. If you have any questions or comments before I fold them, as they say, please ask.
IB alert. IB alert.
Thank you, thank you, thank you. Yeah, Neon, well, I didn't go for 5 hours like I did yesterday, so my voice did pretty good.
NQ, long midpoint reversal. Long midpoint reversal.
JR, I don't know what's going to happen on Monday. It's like a lot can happen. But I do think you have to be conscious of some squeezing going on Monday. But we don't know. It could gap lower and trend down. I mean, it could be a complete jump out the window Monday. But what I suspect, based on what I often see, and this is absolutely not a recommendation, is we do get early selling. And then if there's no love, the shorts that our early sellers get squeezed, and then the shorts from today get squeezed. And that can make for a pretty strong up move. And it's strictly on in the squeezeteria. But those are tradable, you know. It would mean being on the long side, which might, I mean, that could be a tough trade, you know, very volatile. So, not saying anything more about it than that because I have no idea, you know. So I don't predict, you know, I just think about possibilities. And part of it is market mechanics. If the market gets oversold, what does it do? You know, it's going to feed on the buyers. And who are the buyers? Well, buy stops, you see. So that's kind of the fuel. And I always think on who might be off sides. So it's just a possibility.
Pending VPOC alert.
Well, Lucero, I'm only saying have a trade plan and choose your product, you know, that fits your risk parameter. You know, that's basically it. And
ES.
what I'm talking about is risk reward. If you have, you know, options are a great vehicle. I used to trade expiring options. I'd only trade, it was XMIs, and I would only trade them, I'd only trade them when there was a couple days left in them because of the leverage. That's something I used to do. Yeah, Maya, that's a good point. I'm going to switch over the weekend, Jerry. I'm going to be on Sept. In fact, I'm going to switch after the close here because I got to update all these levels. I think there's like a 2-point spread. I got to go look at go to CME and see what the spread is, but because of, you know, backwardization to hold, it's nothing to be concerned about. But you got to see the spread. So if you have fixed levels, you need to adjust. So these are all manual. All this stuff is manual. This is not. Feeds off my IRT, but all this is manual. This is manual. So I got to update all these. So we'll be doing September. So guys, I'm rolling over end of day today. It's not a big deal to roll over for me, except for the manual aspect of it. So, but most everything since I use Investor RT, it'll just update the levels, and then I got to transfer in the Bookmap. That's it. So that's my homework for the weekend, and then be ready.
NQ, pending VPOC alert.
The developing value area high and low is basically where 70% of the volume took place in here. This is where the highest volume for the day is. We're in the lower distribution that is showing potentially acceptance at the moment. Okay, so this is definitely a well, not definitely, let me retract definitely. This is potentially a continuation mode early on Monday, and then you got to see. Okay, so that's kind of what I've been looking for. I'd be looking for everybody who's going to, quote, read the paper, or, you know, retailers, you know, guys with ETFs, mutual funds, and the rest of it, who are long, they're going to see the news and they're going to be selling. When that selling is done, if there's no continued selling, then once that is absorbed or is exhausted, then the shorts start to cover, and it sets off. It's like throwing a match on gasoline, and you can get an outsized move to the upside. So that's kind of what the deal is with that. So write that down if you haven't thought about it. And it's not anything that will happen. It's just a maybe. And maybe's all you got in trading.
ES. Pending VPOC alert.
So Neon on 3 contracts, you picked up over $8,400 today. I think that's a nice take for a day. That is a payment on the Ferrari,
Pending VPOC alert.
or a down payment, maybe.
ES, pending VPOC alert.
Lucero, it's rotational. I don't know how many trades we observed today. I don't count them, but there might have been 15 and there's 10 point, 18, 15 point rotations. And on a mini, their brain is really gone. $50 a point. 10 points is $500, etc. 20 points, and we had some of those are $1,000. And that's on a 2-lot. So if he's running 3, you see, you go up from there. So that's futures. It's leverage in futures.
ES, pending VPOC alert. ES, pending.
Congratulations, Jim. I'm glad to hear your win percentage is going up substantially. I guess I'm helping a little. That's great. Good news.
ES, pending VPOC alert. ES, pending VPOC alert.
Trading newbie. How newbie are you, newbie? Picked up 4,500. Now remember, we don't trade. Glad to hear you guys are doing great, and I don't call trades. You are doing this on your own. I'm really proud of all of you for what you're doing. It shows that we're kind of making some progress together. That's really cool.
VPOC alert. ES, pending VPOC alert.
Yeah, Captain Price, don't worry about it. We all walk before we run. Well, trading newbie, don't worry about it. If you can walk out of here with intact and with a few dollars in the coffer, you've proven to yourself that you might be able to do this. It's all a journey.
Long 3x3.
In the beginning of my webinar that I did, which is our introductory thing, which is foundational, I said trading is a journey. It's not a destination. You're never done. I'm not. I'm still doing research. I'm trying to get better. I mean, can't we all get better and improve? Oh, good. Well, thanks, trading newbie. I'm glad to hear it. Well, Lucero, you got to kind of choose where your comfort is. And here's the other thing. SPYs, Qs, it's all the same, but you just need more range, right? I mean, it's risk-reward ratio. It doesn't change. It's really...
Yes, pending VPOC alert.
Devanya, go to bookmap.com or click the link down below under more. You'll see a link. Join the Traders Lab, the Bookmap Traders Lab, and you'll have access to a lot of education. My PDFs, which are about 80 examples of, I don't like to call them setups, phenomena that you can observe. You might find that useful. In Lucero, it's just risk-reward ratio and what you need to make it pay, You could trade Qs and SPYs. It's all the same, really. The difference is the leverage,
ES, pending VPOC alert. ES, pending VPOC alert.
Meyer, thanks for being here and being forgiving.
ES, pending VPOC alert. ES, pending VPOC alert.
NQ, long to P, long to P.
ES, pending VPOC alert. ES, pending VPOC alert.
Well, Drew, I'm glad you're getting something out of this. Welcome to the Trader Lab. Yeah, Bookmap is really an amazing tool. When we talk about Myers Ferrari, basically, to me, Bookmap is the Ferrari. And it's something most retail traders will never get to because they'll never be in the business long enough. They'll never get to this. So and it's its own tool, and it's really nuanced, and I think it gives you an edge. It's like everything else. And if you think about it, I mean, there's a cost to everything, but it's just overhead. I think let's assume it takes 6 points in the ES per month to cover the cost for this. Can you pull 6 points out using a tool like this? I think so. To me, anyway, I'm just saying. Floyd, I can tell you, I have stories, Floyd, of guys I've worked with over the years. Um, in fact, I'm not going to really go into what I've done much, but I will say that um, a lot of zeros. Not retail. So I'm just going to go that far with it. And then everybody can kind of write zeros down and figure. But I've been there and done that, which doesn't mean anything, right? It's just I've dealt with positioning, you know. None of that was day trading. So it's just part of one's travels, you know. But when I was doing that, I wasn't doing this, you know, because that's a different approach. It's in a different time frame altogether. And a lot of it was, let's just say, currencies and things of this nature. So it was really a different animal. You know, neither here nor there. Because what I do today is not even anything like what I've done years ago. Because the tools have changed and the environment is different. Technology has changed it, right? We used to have floor traders, you know. Now it's all electronic. I mean, the whole landscape has evolved. So you got to kind of change with it, you know. But I don't do that anymore. I like sleeping at night. When I used to hold these positions, it was definitely a problem. When you get the phone call in the middle of the night because what's going on in Asia, you know what I'm saying? So I'm just saying, I'm glad I'm not there. Leave that to the 20 and 30-year-olds. Not me. Have a great weekend, everybody. Yeah, you got to have rhythmic. It's the data. It's CME only, and it's called MBO data, market by order. That's how they can determine what's an iceberg, what's a stop, you know. Otherwise, it's just a price, and you don't know what it is made up of. And it's, for me, I want to know the difference between retail behavior, you know, what's moving the market, or icebergs. So it's giving me something that retail traders are, most of them are looking at vertical price movement, you know, bars, candles, whatever. Time based. I'm not there. Time is not an element to me other than the open, the close, you know, lunch, EU, you know, that kind of stuff. But otherwise, the clock has nothing to do with the auction. It doesn't punch the clock. So when we try to organize markets by time specifically, it is not the nature of the market. I mean, time is a function in the sense of daily bars. You know what I mean? There's a limit, of course. But intraday, the clock is not really material other than those times. EU, you know, open, close, last hour, first hour, you know, the volume variations of the clock. But that's it. And that's because just the nature of volume and how it moves around. First hour, last hour volume, those kinds of things. But other than that, The clock is not relevant. What's relevant is auction, price, volume, and who's the participant. If you can discern that, you've got more information. Then it's the behavior of the order book. What is real liquidity, resting, passive liquidity that wants to trade out, and what's algorithmic behavior, which is a different animal, you know. So there's a bunch of elements, and we can see that with Bookmap. You know, like this guy down here. Look at the, you know. So that's what you can see in Bookmap, you know, and that's useful. I don't have to be looking over here to see the limit order book. I know there's more orders sitting over here than there is somewhere else because it's dark. So that saves me time and brain damage, you know. Have a great weekend. I'm done. I've got to do my updates now and do my rollover. I'm doing my rollover. I'm going to be discussing SEPT contract ESU. So good luck, everybody. Thanks for being here. I appreciate your participation. It's been a heck of a week. A lot of activity. See ya. I might drop in on Saturday to say hi, and see you on Monday. Thanks, everyone.